Good morning, everybody. Welcome to this webinar of WIRC on 5th December. Now it's time for ICI Moto. Request the ICI Moto to be played.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, everybody. Now I would like the chairman of WIRC, CA Manish Gadia ji, to address the webinar for few minutes. Manish ji, please.
Thank you, Rishabh. CA Nishant, Nemani, faculty of the day, and good morning to all the participants. First of all, I thank all of you for exercising your right to go and cast your vote yesterday and day before yesterday. And this is if you compare with the last time elections, this time voting is much higher. But if I compare it overall, the voting percentage of Bombay was only 40%, which is actually lower, very low as compared to any other election. But thanks to everyone for showing interest and selecting the right council, which will take to the institute newer height. WIRC this year has done various work. To name it few, we have started a CEO Speak, that is a journey from articleship to a CEO. So where there are various CEO who are chartered accountant also and running a company. So this is a chat show. Every fourth Saturday of the month, we are having a chat show with them on 10 to 11. Till now, we had 4 in a series. Now, next is on 25th December. I request participants to take the benefit of the same. We have started CFO forum for big and large and medium-sized corporate, where they are meeting every month and discussing the issues and challenges what they are facing. Apart from that, WIRC this year has come out with more than 18 publications. One such publication is on accounting standard for non-corporate entity. Members can purchase and take the benefit of the same. WIRC is available on various social media, Telegram channel, YouTube, Instagram. So I request members to be connected with your WIRC. That is very important. Apart from that, we are having various programs like Coach, which is a portal where a woman chartered accountant can list themselves, upload their profile and interest, whether they want to work part-time basis, full-time basis, or maybe on assignment basis. Various employers are offering job and work to them. For women chartered accountant, again, we have started a WOW series, that is Women on Wednesday. Every second Wednesday of the month, we are having the same. We have also started a package series every third Thursday of the month. We are discussing something or more, anything or other thing on technology. And technology is the future of the profession. Keeping that in mind, we have structured a 2 workshop. That is, one is on data analytics, that is 60-hour workshop, where we are having only 30 participants. And another is the Power BI and Tableau, that is data visualization. Again, 30 it is 40 hour and only 30 participants in the same. So you can take the benefit. We have also started a project called TEL, that is Train, Earn and Learn, where we are giving a training to undergraduate so that they will be ready to work. And these undergraduate are going to take a training with the CA firm for at least 1 year. So any CA firm want to hire this kind of training, link is there on WIRC website on the event. You can make the payment of only 2,500. We will share the data of wire data of more than 3,000 such training which are available. So I will not take much time because we want to hear today's learned faculty Nishant. So thank you very much. Over to you, Rishabh.
Thank you, Manish ji, for your guidance. Now, I'd like the opportunity to introduce to our first faculty, CA Nishant Nemani. He's an associate chartered accountant. He has cleared his chartered accountant's degree in May 2012. He also holds a certificate on IFRS from ICA. He is currently associated with SRBC and Company LLP for more than 5 years now. Uh, Before SRBC, he was associated with GM Kapadia and Company, and he has a vast experience of 9+ years in conducting statutory audit and tax audit. He also provides technical analysis in IGAP and AS accounting standard to his clients. He has extensive exposure of performing statutory audits and tax audit for across various industries like renewable energy, trading sector, shipping industry, manufacturing industry, service industry, retail industry. So I wouldn't take much time and ask ask CA Nishant Nemani to continue with his today's topic, and all the very best, CA Nishant Nemani ji.
Thank you, Rishabh. Thank you for the introduction. And hi, all. My name is Nishant Nemani. Uh, I have been in this field of auditing for more than 9 years now, and it's my pleasure to give my inputs on certain critical items on the auditing standards that is useful for each and every CA who is looking forward to go into practice. So let me start with the session today. Is my screen visible, Rishabh?
Yes, sir.
Yes, it is. Yes, it is.
Okay, thank you. So Essay 210. So our today's topic will be Essay 210, agreeing the terms of audit engagement. Uh, this is one of the important auditing standards. Why is this auditing standard important? Okay. Yep. So why is this auditing standard important? So before entering into any engagement with any company, partnership firm, association of person, any kind of industry, uh, you need to agree with the terms of engagement. Otherwise, there is a chance of misunderstanding, which can lead to a legal consequences at a later point of time. So, or a chance that you might need to qualify a report. So, you first need to understand what is the terms, how are the terms placed, what are your scopes and strategies that you need to place so that you deliver a correct opinion for the users of intended users of the financial statements. Going ahead, so today we'll be dealing about what are the scope and objectives of this standard, auditing standards, what are the preconditions of an audit, agreement of the audit engagement terms, recurring audits, how does this agreeing the terms of an engagement play a role in recurring audits, how does a change in terms affect the decision of a user auditor in terms of continuing the engagement, and a certain additional considerations which are required by law if for an engagement of accepting an engagement. So we start with the first slide, scope and objectives. So before starting the scope and objectives, let me give a brief overview of the auditing standards. So when does this standard apply? So this standard apply when you this standard applies when you want to accept or continue a particular audit engagement. So when accept means somebody is coming new, a new engagement has been come to you and you want to accept. So you want to decide whether to accept this new engagement or not, or to continue in an audit engagement. So I'm doing, suppose as a chartered accountant, I have been doing a particular audit for last 2 to 3 years, and whether I want to continue with this audit engagement or not. So this standard will help me uh, resolve my those two queries when a new audit comes, or when I want to continue a new already engagement that I am been doing for past 2 to 3 years, or so, whatever X number of years that a practitioner is practicing on. So when do I do that? So there are certain preconditions of an audit that needs to be met. So before accepting an audit engagement or continuing audit engagement, certain preconditions are there which have been defined in the standards, that says that you need to meet these preconditions before you start and before you accept an audit engagement and start your audit work or procedures on the client. And you need to have a common agreement between the management or those charged with governance as applicable for the terms of an engagement. So you need to pre-hand agree with the management that this is what our terms and condition will be. This is what is the understanding that is required by law, or that is not. If it is not required by law, this is what is the understanding of the as an auditor, and what is required by you. You need to agree with this with the management. Otherwise, you should not be accepting or starting your audit work before you arrive at a common consensus with the management. So going ahead, so what are the preconditions? So preconditions will be divided into two parts: acceptable accounting framework and agreement of the premise on which audit is conducted. We will learn about this in more detail in the slides ahead. So these are the two basic conditions: preconditions of an audit and agreeing the terms, arriving at a common understanding with the management on the terms of audit engagement. So this essay completely deals with the basic question is when to accept or continue an audit engagement. Moving ahead, so what is the scope of this essay? So as I said, this essay completely deals with audit, accepting or continuing an audit engagement. So what is the scope? The scope will be you agree with the management, you convince the management that these are my responsibility, these are the management's responsibility, and you arrive at a common consensus by uh, establishing the preconditions. However, precondition or matters which are in the control of the management and those charged with governance are covered by this auditing standard. So when I say control, it means which we need to mutually decide. As an auditor, if I only have to decide what are the preconditions, so those will be independence and professional competence. When I say independence, whether I am independent to do that audit, whether I am completely independent as given by the standards on auditing, and I have the professional competency to do that audit. For example, whether I am capable of doing the bank audit or an insurance company audit, so that's a separate sector. So I do have that professional competence or the expertise in that area. So that is dealt with by essay 2 to 220. So precondition or matters which are in the control of an auditor are dealt with in essay 220. This essay, Standards on Auditing 210, uh, completely deals with the precondition or matters which rest and are in control with the management. So that is where agreeing with the terms of audit engagement comes in. So what is the objective of this essay? The basic objective of this essay is to accept or continue this audit. How do you accept or continue this audit? By establishing that preconditions are present. So the precondition of audit engagements are present, and confirming that there is a common understanding between the auditor and the management for the audit engagement or for the audit engagement. So there should be a common consensus. Moving ahead, preconditions. So we are using the term preconditions again and again throughout the scope, objective, and we will be using this throughout the hours today's lecture. So what are preconditions? So next question comes to mind is when I say preconditions of an audit are present. So what are preconditions? So preconditions are further divided into two parts. So as per definition of the standards on auditing, given the preconditions are acceptable financial reporting framework that is required in the preparation of the financial statement. So first condition is the use by management of an acceptable financial reporting framework. So management has to agree that they will prepare the financial statement in an acceptable financial reporting framework. Sometimes this financial reporting framework has been laid down by laws and regulations. Sometimes these financial reporting standards have been laid down by authorized organization who sets standard. For example, in case of non-corporate entities, the ICAI is the governing body who set down applicable reporting framework for doing audit and preparing the financial statement. For corporates, RBI, insurance, there are various regulatory who have set down the financial framework. Going ahead, and the second condition, the agreement of management on the premise on which audit is conducted. So second preconditions is the management has to agree that the audit will be conducted in a certain way, and uh, we and the auditor will form an opinion based on that audit. So management has to agree and agree with their responsibility as well. So management to agree that they are responsible for preparation of financial statement, and they will be help supporting auditor in every way so that the audit can be completed in a certain way. So we will again study what is acceptable reporting framework and the premise on which our audit is conducted in the slides ahead. Going ahead, so what is financial reporting framework? First of all, before accepting an audit engagement, we need to determine under which financial reporting framework are we preparing the financial statement, and under which, how are we going to report on those financial reporting framework. So this is the basic criteria for accepting an audit. If you financial reporting framework are not met, you will not be able to accept the audit. So what are financial reporting framework? So these are the criteria based on which accounts are prepared. Uh, for example, it can be Ind AS, it can be IGAP. So how is an accounts prepared? Is it prepared in IGAP? Is it prepared in Ind AS or some other standard? So you need to be clear with the management that these financial will be prepared in a certain framework, account financial reporting framework. So what is the financial reporting framework? So as given by the standard, financial reporting framework provides the criteria the auditor uses to audit the financial statement, including where fair representation. So sometimes fair representation is not a part of my audit reporting framework, but you need to report on certain financial that the financial are give the true and fair numbers. So where applicable, fair presentation also forms a part of my reporting framework. So what is so financial reporting framework provides the criteria. What is the criteria? When you say criteria, what is the criteria for an auditor? So criteria for an auditor is they benchmark or evaluate the financial, that this financial will be in certain format, and this benchmarking is done representing the laws and regulation or certain industry trends. So this industry provides the financial in a certain format, or a laws and regulation require me to present the financial in certain format. So all these criteria is the benchmark. So the benchmark should be there that this financial will give me this and this output, and hence I will be able to provide a certain opinion on this financial statement. So financial reporting framework is the key. So when a financial reporting framework is not acceptable by an auditor, or it does not have an appropriate basis, for example, a management is not able to explain under what accounting standard or auditing standard are we required to opine on this financial statement? How will you opine on the financial statement? How will you know whether the reporting framework used is correct? So if management is unclear, if auditor is not able to ascertain whether he needs to prepare the financial statement under which financial reporting framework, you will not be able to accept the audit. So financial reporting framework is the basic and the key condition based on which audit has to be accepted. Moving ahead. So what are the factors relevant? Sorry, what are the factors relevant for auditor determination that helps an auditor to understand what are the financial reporting framework on which the auditor has to report? So what are the factors? So firstly, the factors that are the factors that are relevant to determine are nature of entity. For example, what are the, is it a business enterprise? It is a partnership firm. It is a government entity or something else, association of person or a small entity, small enterprise, whatever. We need to determine what is the nature of entity, and accordingly the framework will be decided. For example, if it's a listed entity, the framework will be decided by SEBI regulations. If it's a this entity governed by Companies Act, the framework will be determined by Companies Act. If it is a partnership firm, the framework will be determined by the uh, ICI's regulation maybe. So you need to determine what is the nature of entity. If it's a government entity, so government entity has a separate altogether financial reporting framework given by the government authorities. So your framework should depend on the nature of entity. What is the nature of entity? It's a small entity or it's a medium MSME entity, for example. So it is governed by the MSME standards and MSME Act. So a nature of entity is the first factor that is required for an auditor's determination that the financial framework should be. So what will the financial framework? Second is the purpose of the financial statement. So what is the purpose of the financial statement? Whether it is a general purpose financial statement or it is a specific purpose financial statement. Your report will depend accordingly. For example, if there is a wider range of audience that you need to cater to while presenting the financial statement. For example, in case of listed entities, where you cater to thousands, lakhs of people at a time by presenting the financial statement. So those are general purpose financial statements. And user will not be able to meet management or the company will not be able to meet the demand of each and every user, the lakhs of users. So there is a common agreement arrived that these are the common terms required for the users, various users, the lakhs or thousands of users who read the financial statement. So when it is prepared for a common masses with a common understanding, those are called as general purpose financial statement. So what is the purpose of financial general purpose or specific purpose? So if I want to give an example of specific purpose, so what will be the specific purpose financial statement? The specific purpose financial statement will be suppose you require year end of a company is 31st December. There are few companies who still have a year end as 31st December in India. So for the purpose of tax audit, they prepare a financial for the financial year April 1 20 to April 1 to 31st March. So these financial statements are not required by law at any places. And you prepare this financial statement. And for this financial statement, you issue a report that is for a special purpose financial report given by the auditor that this financial are true and fair, presented fairly, and it is only for a specific unit that is for a tax authority. So those are special purpose. So when it is required only by law, regulatory for a certain work or certain filing, you can say those are special purpose, specific financial statements, and accordingly you need to decide the framework. So purpose is also a relevant factor while deciding the framework, whether it is a general purpose or it's a special purpose financial statement. Next is the nature of financial statement, whether you are required to report on the complete set of financial statements or a single financial statement as its standalone entity. So what do you mean by complete set of financial statements? When you say complete set of financial statement, it includes balance sheet, statement of profit and loss account. In case of India, it also includes statement of changes in equity, other comprehensive income, and other schedules that forms a part of my financials, including the cash flows. So what is the nature? Is it a complete set, or just, or you only need to report on the balance sheet and the P&L, whether the balance sheet and the P&L as in standalone are correctly presented or not? So that is also key relevant factor for deciding a financial reporting framework. Secondly, laws and regulation also prescribes applicable financial reporting framework. For example, if the entity is registered under MSME, if the entity is a government entity, if it is a listed entity, if it's a non-listed entity, these all entities have, or if it's an NBFC, if it's an R bank, if it's an insurance industry, all these industries, whatever industry, insurance is guided by IRDA, RBI is guided by, sorry, banks are guided by RBI, NBFCs are guided by RBI, listed entities are guided by SEBI. So all these regulations are imposed on these entities by various authorities. You need to keep in mind what are the financial reporting framework and what are the nature of entities that you are auditing. And accordingly, your financial reporting framework will be decided. Coming to the next slide, it says what are the few examples of financial reporting framework. So my few examples will be uh, IGAP accounting standards or INDEX, which are issued by the ICI and notified also by the central government in case of Companies Act. So one is INDEX and IGAP, which is generally used in India for preparation. Other framework will be accounting standards issued for local bodies by ICAI. Next is IFRS. These are international accounting standards of financial reporting standards, which are issued by International Accounting Standards Board. Next is International Public Sector Accounting Standard issued by International Public Accounting Standard Board. Apart from this, there is also US GAAP. However, you are required to be a certified under the PCOB, which is the Public Company Oversight or Account Auditing Oversight Board in US. If you want to prepare a financial in US GAAP, and you need to deliver there. So most of if IFRS, if International Accounting Standards Board require you to be certified in IFRS before you can prepare a IFRS accept of IFRS engagement, then you need to get a certification in IFRS and then only you can prepare. So you also need to check whether before accepting accounting framework, whether the accounting framework requires you to be certified in those accounting standards or auditing standards, and then only you will be able to do an audit for that matter. So basic, before you accept an accounting framework, please be sure that you are professionally competent to accept the engagement, and you will be able to report in those reporting framework. Otherwise, as per audit engagement standard, you should not be accepting such engagements if you are not professionally competent or are not of the accounting framework is not acceptable to an auditor. Okay, so these were the few examples. Going ahead, so what are the attributes? What attributes does a financial reporting framework normally show? So, so what are the relevant? So, one of the first elements attributes that a financial reporting show, reporting framework show is relevance. It is relevant. So, uh, how do you test what is relevant? So, the relevant depends on the nature of entity and the purpose of financial statement. So, you need to understand what are the nature of entity that you're auditing, who will be my users, who will be the users, and whether the information that is given by the framework will it be relevant to those users or will it not be relevant to those users, and what is the purpose? Is it for a large margin of the people or it's for a specific person, but the management, those charged with governance, or is it for the common market? So relevance is a important part in determining the attitude. It is an important attribute of a financial state reporting framework. Going ahead, completeness. So a financial statement should be complete for a particular event or transaction when such transactions or events are disclosed in the financial statement. So what do you mean by completeness? So for example, I audit a client and I know that client had a factory and the factory was had a accident or fire in, incurred in the factory at a point of time in the previous year. So the financial statement should give a complete view of those transactions. For example, I cannot just write a one-liner. Management would not expect me to just write a one-liner that the fire was incurred in the factory and company has given the appropriate impact. So this is not a complete uh, way of saying that this is financial statement is complete in all respects. A proper agreement has to be reached with the management that you will be disclosing the entire thing, that the fire was incurred, what was the financial impact, what is the management doing to mitigate the such type of incident in future, what is the management, how is management coping with the financial losses, how much is the insurance claim receivable for by the company, how is the insurance claim, where is the insurance process stuck right now. So all these entire attribute factors that you give should be for the incident. You cannot just write one line. So your financial statement should be complete for a particular event. For example, there another example that I can think of in this case is a loss, a major debtor, a customer of the entity has filed for bankruptcy. So you create a provision for the major credit customer. However, just creating a provision and giving in the financial statement will not be sufficient because customer is a major customer who may be contributing 90% of your revenue. So if he files for in bankruptcy, it will affect the entity in the long run. So you need to disclose that the major customer of the company has. It also depends on judgment basis, right? Whether the customer is major, how major it is before giving a disclosure. However, if suppose if a customer is 90%, you are earning entity is earning 90% of the revenue from that major, and that major customer has filed for bankruptcy, then you need to give a full detail because it will affect the entity in the major way. So your financial statement should be complete in every way. So that's another attribute of the attribute that the financial statement gives. Next comes to the reliability. So what is the reliability of the financial statement? When I say reliability, so it the standard says the uh, statement should have an economic substance. The financial statement should show the economic substance over the legal form. When I say economic substance over a legal form, how will a financial statement depict it? So, example for this can be company A and company B. So, you are an auditor of company B, and company A and company B have entered into a transaction where company B is acting as an agent of company A. So, how will you show the transactions of purchase and sale in this case? In the financial of company B, you cannot show entire purchases and sales of company A in the financial of company B because the agent acted on behalf of the company A. So in this case, what you will do, you will only show the commission income and all the sales and purchase will be in the books of company A. Accordingly, company B financial will only show the commission and it cannot show 100% of purchase and 100% of sales again because company B was acting as a agent. The preparation financial statement should depict that company B was an agent. Although sales were routed through company B cannot be show that uh, purchase and sale in its own name. It has to show it in the name of the company A. Accordingly, only one head will come in the in the books of company B, that is commission income. So your financial statement should be reliable. It should be giving you a correct picture. Secondly, Uh, Next, coming to neutrality. What is neutrality? So, management financial reporting framework says the financial reporting should be neutral. It should be free from biasness. So you cannot, for example, a company is there from past trend. It has been showing that it has been previous auditors and the company image in the market says that the company is has been hiding information or has not been able to give information to the auditors. So that company has changed its auditor and it has come to you asking, uh, will you be the auditor? What you will do? You will go through the audit reports. You will go gauge the company's reputation from the market, and you will say that this is the reporting framework that I report on. I need to report on, but it should be neutral. Your financial statement should not be biased, saying a company has already done this. Based on the inquiry, if an auditor feels that uh, the company will be able to provide him with all the sufficient information which was not provided to the previous auditor for some reason, you may accept the audit. You should not be completely biased while accepting a or while presenting a financial statement that this company has already have a history of not giving, so it will be okay if I continue with not give, the company has not given me the details, and it so that's the biasness created, which is not at all good for accepting a financial audit and accepting a financial reporting framework. Next, understandability. So your financial statement should have the quality that it is very easy for the users to understand. It should not have vague interpretation or accounting policies. When I say vague, what do I mean? You, for example, a financial statement in a renewable sector or any manufacturing industry, for example, has huge capitalization, and as per AS 10 or in AS 16, you are required to depreciate those assets, and the, the accounting standard or the Ind AS accounting standard gives an option that depreciation management can reassess the depreciation useful life of the asset at the end of each year and accordingly depreciate. And so you put an accounting policy that depreciation in the so you put an accounting policy in the financial statement stating that depreciation is based on management assessment. That's it. So what will users interpret? What is management assessment? Is it 10 years? Is it 15 years? Useful life? Is it 5 years? No. So your understandability and financial statement, so user understandability will depend on the useful life of the years in this case. The depreciation is charged for 3 years on a particular set of machinery, for 5 years on a particular set of machinery, and for 10 years in some particular. So that is understandability. If I just write that one liner stating that depreciation is based on management, nobody will understand what is the management policy. So you need to clearly define those policy. You need to be specific in a financial statement, stating that this is what is there in the financial statement. This is how you have arrived at it, and hence your that will be more understandable to the users of a financial statement. Going ahead, what is another attribute? So suppose there is an accounting entry that you need to pass. So you come up with a situation where there is no guidance in the IGAP. For example, you're preparing a financial statement in IGAP accounting standards, and there is no accounting impact that you could identify in any of the accounting standards. What will you do? So it's an accounting entry that you need to pass for a certain transaction. How will you do? So the standards auditing says sometimes you need to compare this accounting convention, the guidelines for a certain type of entries or a transaction or an event with some other accounting standards and check whether these are there in line with the norms of those accounting standards or not. For example, I came across an entry, for example, in 1 year back, I came across what to do with a goodwill of an investment when investment is impaired in case of Ind AS, sorry, AS 23. When I consolidate associates and associates, so there was a situation where I faced what should I do when goodwill is impaired as a part of investment. So in AS 23 says when you consolidate an associate, you use equity method, and equity method also states that cost of investment includes goodwill. So how do and when I compared that cost of investment with the impairment value, recoverable value that I was getting for the investment, there was impairment suggested. So will that goodwill be permanently impaired in the investment or not? So that was a difficult finding in the AS. However, you can have a comparative look when you go to index. Index clearly states that impairment includes everything: impairment of investment, impairment of plant and machinery, impairment standards covers everything. In that case, you can compare your accounting convention, which is absent in one framework with another framework, so that you do not have a financial statement that is misleading. But that's a rare case. Normally, all the accounting standards or all the accounting framework will have all the guidance reporting. Sometimes it happens you come across a rare situation where you accounting convention is depict you do not have accounting convention depicted in an accounting standards or an index. So you might need to look into a alternate framework, so that alternate existing framework to help you out with this. Going ahead, in case of accounting convention, there was one more thing. You can also look at the industry practice. For example, in case of a renewable energy or an infrastructure company, there is government gives you grant to the entity where for setting up the infrastructure project. So how does my peers, my competitors record those grants either by income approach or capital approach? That also we can have a look. So comparison of accounting convention with to an existing financial reporting standard can be industry specific as well. So these are the following attributes that a financial reporting framework should have. Going ahead, so first was the precondition. We have finished with the first precondition. What is an acceptable accounting framework? So acceptable accounting framework should have factor when assessing a acceptable accounting framework. You need to have certain factors in mind, keeping what is the nature of entity, what was the purpose of the financial statement, and what are the key attributes for accepting an accounting framework. If I want to select a particular financial accounting framework, what are the key? Well, it should be relevant, it should be complete, it should be neutrally, it should not have biasness towards it. If whether it has been guided by accounting conventions or general purpose financial statement, or whether it is sorry some reliable. So whether the accounting framework is reliable to the financial users of the financial statement. So all this you need to have pre-decided before you accept an engagement, and before you accept an engagement, you need to be clear on the accounting framework. Unless you are clear with an accounting framework, you will not be able to start your audit. So this is a basic condition for you to start an audit, and you need to get this agreed with the management before you start with the audit. This is the framework that I will be using. This will be the reporting based on these frameworks, and accordingly, these are the terms before that you need to agree on before we just hold on a second. Before we start the audit. Going ahead, what is the second precondition? That management has to agree on the premise on which the audit is conducted. So what is the premise on which the audit is conducted? So first thing is that the management has to agree that the preparation of the financial statement will be in accordance with the applicable financial reporting framework, and where applicable, it will also include fair presentation as well. So most of the laws and regulation in India says that the financial statement are true and fair, give a true and fair view and a true and fair presentation as well. So you need to be very clear with the management that the audit will use this accounting framework, and financial preparation will be based on this financial reporting framework. Okay. So how do you divide the management? So this has to be agreed with management and those charged with governance. Okay. So when you say management, so and when I say those charged with governance, so those charges in the governance is normally associated with a listed entity or where laws and regulations are given that there has to be two separate line of overview where those charging governance will have a oversight and there is a management side as well. So management for a private company, management and those charged with governance can be common. But for a listed company, those two might be a separate altogether. So how do you decide bifurcate between the responsibility of a management and those charged with governance when you get to agree with the terms and conditions? Sometimes those so it all depends on the size of the entity. For in normal circumstances, management is the one who executes the financial statement, and those charged with governance are the one I'm sorry, who gives a financial oversight of the who reviews the financial oversight whether the financials are prepared accordingly or not, and management is the one who executes it. For a larger in some cases, management and those charged with governance uh,
हेलो। हेलो सर, आपके यहाँ से थोड़ा नेटवर्क चेक करिए ना, आवाज साउंड बहुत कम आ रहा है। हाँ यार मत। अभी बोलिए। नहीं, आवाज ही नहीं आ रही सर आपका। हेलो। नहीं नहीं सर, आपका आवाज नहीं। हेडफोन्स जरा हे कीजिए ऊपर।
Hello, am I audible now, Mishra ji? Hello,
हाँ सर, अभी आवाज आ रहा है।
अभी आ रहा है ना? ओके,
हाँ।
फाइन, थैंक यू। मैंने रिकनेक्ट किया, डिस्कनेक्ट करके। Uh, okay, so shall, Mishra ji, can I start? Screen visible है ना?
हाँ बस सर, स्टार्ट कर दिए।
हाँ ठीक है, चलेगा, थैंक यू।
ओके।
Okay, so sorry for the interruption, guys. Some technical issues on my side. So work from home, online virtual has its own merits and demerits. Going ahead, sorry, we were at what are the precondition, what are the premise on which the audit is conducted. So first basic premise is getting the terms and condition agreed with the management. As we understood previously that getting the terms and condition agreed with the management, and management responsibility varies from company to company, the size of the company and everything. Going ahead, so what are the premises? The first premise is that the preparation of financial statement will be in accordance with the uh, acceptable accounting framework, which is applicable or acceptable accounting framework. Secondly, the entity should have internal controls that will help the preparation of financial statement that is free from material misstatement, and which is can be due to fraud and error. However, this material misstatement, this financial statement, internal controls will only help the entity in resolving inherent risk or inherent controls or inherent problems that the company faces. For example, in a retail industry, what is the inherent risk that the company will face? It will face the cash loss. The person working at the counter may abscond with the cash. How do you control all these things? Cash is the biggest factor. How do you monitor the movement of the cash? So those are the inherent risks, and that if the management controls the inherent risk applicable to that entity, it will more or less help the financial statement be free from due of from fraud and error. So management should have in place such internal control. Again, as an auditor, if you are auditing, it will not say that if you are auditing the financial statement, it will not help the management say that the internal control were present. Management has to separately put in place controls stating that these financial statements were free from error. Also, the management should uh, again, when you agree that you will opine on the internal control where applicable, will not be a confirmation to management stating that we will report that internal control were present and financial statement were free, or the internal control there were no deficiencies in the financial statement. So this all has to be agreed with the management beforehand. Otherwise, any presumption assumption can be taken by the management. So this is also another premise on which the audit is conducted, that internal controls are in place. We are not acting as a management on part of the management to say that internal controls are running effectively, and we are not there to even set up the internal controls. We are only there to test the internal controls and give an opinion on it. Okay. Next part is uh, management has to agree that management will provide all the relevant information that management is aware of in preparation of the financial statement. Okay, management has to agree that. Otherwise, if management is not going to provide you with all the relevant information, you will not be able to provide an effective opinion on the financial statement. Management also has to agree that they will provide any additional information as required by the auditor for reaching to an effective conclusion. Also, management has to agree that they will provide an unrestricted access to the auditors. If there is a limitation in scope given to us by the management, then we may not be able to provide a appropriate opinion, and accordingly we will not be able to accept this engagement if there is a limitation in scope. Hence, we have to agree with the management that they uh, they will provide us with the unrestricted access to every branch information, document, or any other evidence that they have. So this has to be premise on which the audit is conducted, and this has to be agreed between the auditor and the management that financial reporting framework are okay, internal controls are there, and it is the responsibility of the management to maintain and those internal controls, and management will provide with the auditor with all the relevant information and that the auditor may request, any additional information that the auditor may request, and unrestricted access to the books of accounts of the branch, company, documents of the company, or any other place where the where it is deemed for necessary for the purpose of audit. Okay. So this was the regarding the premise on which audit is accepted. Uh, uh, so what is what if there are limitations before moving ahead? So what if there are limitations by the management stating that you cannot audit so and so thing, you cannot audit this particular area, or you cannot audit this particular branch? Then auditor has to assess whether the limitation in scope is allowed by the applicable laws in regulation where applicable, or whether it is, if not if it is not guided by laws and regulation, whether it is justifiable to do so. If the Because in such cases you need to assess your the auditor needs to assess whether what impact will such condition have on the reporting. I'm sorry. So auditor needs to assess what impact will it have on the reporting. So if the limitation of scope uh, says because of the limitation of the scope, an auditor has to disclaim its financial statement, then auditor may choose not to accept the audit engagement unless and until required by law to do so. So going ahead, so because of the preconditions are met, you will reach a common understanding between the management and the auditor that these are the preconditions for an audit, and this is how the audit will be conducted. So once that is reached, you can it's an uh, you can continue with the audit work. So agreement of next we come on the next topic on this is agreement of engagement terms. So how do you document this agreement? So this is documented and taken on record via an engagement letter or any suitable written agreement form between form which is acceptable to both the auditor and the management. That this is what are the terms that we have agreed. So whatever we have discussed till now, these are all agreement between management. So how will you abide by it? Well, so you need to have an audit engagement letter in place or a suitable written agreement in place to say that these are the agreements and these are the agreements in place and this is what we have agreed to, like an agreement in writing. So what all the agreement should have? The agreement should have what are the objective and the scope of the audit of financial statement, that these financial statements are prepared in accordance with which financial framework, and how much, what is the scope, under which regulation it is prepared, and how it is prepared. Secondly, the engagement letter should also have a responsibility of the auditor, that we are responsible, that as an auditor we are responsible for A, B, C, D, E, so and so things. Then we are required to report on so and so things. And as an auditor, we are required to follow certain independence rules, laws, regulation, everything. So these are the responsibilities of an auditor, and these are we need to abide. So engagement letters should clearly state out what are the responsibilities of an auditor. Third, engagement letter should also list out the responsibilities agreed by the management, that they will give us all the information, they will prepare the financial statement, acceptable accounting framework, they will have internal control in place, they will have additional things in place, everything. So the agreement of an audit engagement should have also have which financial reporting framework, what is the objective of the financial statement, and it should also state that according to this the fifth point, which says reference to expected form and content of any report issued by the auditor. So this means the if the applicable accounting framework requires us to issue an audit report in a certain format, we will issue that report. The engagement letter should also say that we will issue the opinion in the format given by the such and such so and so laws and regulations. And we should also state that this opinion might change based on based on the form or content of the opinion might change based on the circumstances of the audit, which may refer from if there are any findings. So this all should be a part of the audit engagement letter. So these are the basic heads that engagement letter should cover. What are the objective? What is the scope of audit? What is the responsibility of the management? What are the responsibility of the auditor? What are the framework in which we are auditing? And what is the report we are going to issue based on our opinion? What are the and that report is guided by which laws and regulations? And if we wish to def- uh, and if we wish and the auditor wish to differ from the expected form and content, why will it do so? So this should be clearly stated in the audit engagement term. So if you go in further detail, so what else does the form and content of audit engagement letter say? So it says you need to give references to the applicable legislation under which you are auditing. So if you're auditing under SEBI rules, if you're auditing for limited review, what are the essays that you will use? Are you going to use international auditing standards, or are you going to use Indian standards on auditing issued by the ICI? Which ethical or independence pronouncement are you going to use? For example, if you are auditing under US GAAP, so you will have to use the you use a framework that is US GAAP or IFRS. Then you might need to use an independent or ethical pronouncement issued by those bodies. You need to clearly mention those in your form and content of the letter. Secondly, engagement letters. I mean, next is form. the next part that you need to disclose is the form of any other communication of results of audit engagement. So, as I said in the previous slide, that you need to say that this is how we are going to give you the audit engagement letter, or we will issue a management letter representation stating that these were the immaterial deficiencies that were found in your or in the audit, which are immaterial. So we will have this format. We will report it to the management. These are the control deficiency that we were identified, or they will report to those charged with governance. So this is the method of communication that we will be giving to the management. This should also be clearly stated out in the engagement letter that this is how my communication will happen when I when the auditor comes across an issue, a control deficiency, or when final opinion will be reported. It will be reported in such and so such form and given to management. Next is the requirement of an auditor to communicate key audit matters. So key audit matters are not required. If applicable to a company, then it will be responsibility of the auditors to provide give an opinion on it, and it is not applicable to all companies. Currently, it is applicable to listed companies and equivalent listed companies. So key audit matters, the auditor report should also state that these are the key audit matters, and these are the key audit matters, and we will report this to the management. This should also be covered by your engagement letter, that we will report on the key audit matters identified during the course of audit. Next thing that should be a part of engagement letter will be the fact that there are inherent limitation, and there is inavoidable risk that mis- the, that some material misstatement not be detected. So we need to clearly state this in the engagement letter. Sometimes management says that audit is done, so there is no material misstatement in the financial statement. That is not the case. You need to clearly agree with the management that we are doing audit, or we are the watchdogs, we are not the bloodhounds. So there is an unavoidable risk that some material misstatement may not be detected. This is a key point that should be there in your engagement letter with the management, because management comes up to you, says you did the audit. They go to the third party and say that my financial statements are audited and there are free of material misstatement. That is not the case. We cannot give 100% assurance that a financial statement will be material from. We can give some assurance that there are controls in place which will help a financial statement from material avoiding the risk of material statement. But we cannot give an 100% assurance as an auditor that these financial statements are completely free of material misstatement. So that is what has to be there in the engagement letter. Secondly, there should also be there in the engagement letter that management is required to give us a representation of the management, stating that these are the things that are present in the financial statement. These are the things that we management has taken decisions on, and so decisions have been taken by the management. This written representation are to be taken with the management along with other supporting evidence that the management has provided us. So this is also has to be agreed in the written form that management will provide us written representation wherever necessary for the purpose of supporting along with other supporting evidence. So this also has to be taken in writing that management is giving you a written representation. Next thing that has to be taken on writing is that if the management has become aware of any issue post the audit report date and before issuing of the financial statement, they should be informing the auditor any issue, any fraud, any risk that management has come across that will affect the numbers on the financial statement. Management has to come and inform the auditors, stating that these were the issues identified. This has to be agreed in writing with the management that this was their responsibility and they have to get it uh, they have to get this done and come to the auditors if they find any such incident, event, or transaction happening. Next thing is the basis on which fees are computed and billing arrangement. This is also a critical part for an audit engagement letter. Sometimes what happens is we do not agree on the fees and we start the audit, and then there is an issue that where the auditor feels that fees were never accepted. This should not be the case. This should be pre-hand discussed with the management. This is how I will build the management. This is how I will build. This will be including my out of pocket expenses. This bill will exclude GST. GST will be over and about over the my fee price, and what other arrangements if applicable. So this should be clearly stated in your engagement letter. Also, the fact last point that should be clearly important point stated in the engagement letter is that the auditing firm is subject to peer review. Why is this necessary? This is necessary because the documents that you collect from the management as a proof, as an audit evidence, will be shared with the peer reviewer. Hence, you are required to state and agree with this with management that you will have to share this during peer review, all the audit evidence gathered by the auditor. This has to be pre-agreed with the management. So going to other relevant points that the auditor may consider necessary. So these are general terms and conditions that is part of all the engagements that an auditor should agree if it is applicable. For example, you should agree that I will be using so and so expert in my auditing. For example, you are an auditor. You have an understanding of audit. You do not have an expertise in tax. You approach your internal tax department. So this should be pre-agreed with the management that you will be sharing information with the tax department for the purpose of audit conclusion. You will, if you are using the service of internal auditor, you should have this pre-agreed with the management. Or in case of an initial audit, that how will you use the work of a predecessor auditor, or any other restrictions that, for example, in case of certain miscommunication with the management, what is the liability? What is the restriction that auditor's liability will be? Any reference to further agreement, any other agreement entered between the auditor and entity beforehand. All these are the general terms and conditions. I will say these are the safeguards that the auditor should have in while entering into an agreement with the management. Unless these safeguards are there, you should not enter into an agreement, and you should not be starting the audit. So these are the safeguards that one auditor should have before entering into audit, and they should all be forming part of the written agreement or taken on record. So in what going ahead, audit engagement letter in case of a component team. So suppose there is a company A and there is a company B, and you are appointed as the auditor of company B. Do you need to have a separate engagement letter for company B? That will depend on circumstances. That is, who appoints the auditor of component that company B, the subsidiary. Whether it's a parent company that is appointing the auditor, that whether it's the component subsidiary company that is appointing the auditor, or whether it's a branch that is appointing the auditor. Suppose a company has two divisions, division A and division B. Division A, you are the auditor. Division B, there's a branch auditor. So who appoints the branch auditor? So terms of engagement letter depends on who is appoints the auditor, whether there is a separate auditor's report for the branch as well or not, what is the legal requirement in the laws and regulation, what is the degree of ownership taken by the parent for the branch, whether the parent says the branch is to be completed audited by you and we are nothing to do in it, or whether parent takes the ownership of the branch, and what is the independence requirement. So all this has to be considered before issuing an engagement letter to a component team. When I say a component team, it means a subsidiary, it can be a division, it can be a branch of a main company. Moving ahead, recurring audits. So what happens in a recurring audit? Is there a requirement to issue a engagement letter again and again in case of a recurring audit? It may be yes. The answer can be yes. It can be no. So when is the answer yes? When do we require to issue engagement letter again in case of a recurring audit? The circumstances in the which audit engagement letter has to be issued again in case of recurring audit are any indication of the change in objectives, there was a misunderstanding of the objective and scope of the audit with the management, which was identified during the previous audit. Whether there are terms changing the special terms of the audit engagement, whether the management of the auditors of the entity has changed, if the owners have the audit entity have changed, so you are required to, whether there is a significant change under all these circumstances, you are required to go ahead and tell the management that this was the terms and agreement agreed with you, and there you are required to abide by this management responsibilities. If those are not accept in such cases, in case of recurring audit, you are required to issue a engagement letter once again. So what happens when the terms of audit engagement changes? So what happens when you decided that this was the original terms that I agreed on, and now management has come to you and says that this is changed. You are not going to audit on this original term. So there is, you should first of all have a reasonable justification stating that, okay, this was the terms, these are the new terms. Is it justified to agree, accept the new terms? Your question can be yes or no. You need to assess for every change in audit terms whether the change in audit terms are acceptable to the auditor or not. If those are acceptable, good enough. If those are not acceptable, auditor has to either withdraw from the audit already being done, which is being done by the auditor, or if not required, unless required by law, has to modify the reporting. You need to decide what kind of reporting I need to do when my limitation and scope are there. Okay, so you need to decide if the change of terms are in your favor or not. And if the auditor decide that the change of terms are reasonable, management is given a fair justification that this change of terms are acceptable to me, those new terms have to be taken on record by the auditor. Okay, every change in term also has to be taken on record by the auditor, and the original agreement has to be amended with the management. So coming ahead, what happens when you accept the new terms and conditions? So first thing, when you accept the new terms and condition, what happens to the work already done by you? You have performed a certain amount of work till now. What happens to that work? So those may be relevant to the new term or may not be relevant. You may wish to use those work which you have performed till date as a part of new engagement terms, and also the reporting issue will come in this. So you may decide that the reporting that you are going to issue right now will continue or will not continue. So you need to decide on two things when you accept a change in terms, whether the original relevant engagement work that you have done should be continued or not, and the reporting that you are required to do should continue or not. In any circumstances, when you report on the new engagement term, you should never ever give a inference to the reference to the original agreement work done and to the original agreement. In either cases, you will never mention about while reporting about the original agreement, audit engagement, that the work you have performed and how was that reporting was done and how you have changed. Your opinion should never say that. It should only constitute of the new opinion that or the engagement agreed between the management and the auditor. Okay, coming to the last part of the segment, that is what happens when there are additional consideration in an engagement acceptance. So what do you mean by additional consideration? So there are three parts in it. When additional consideration are supplemented by when financial reporting standards are supplemented by laws and regulations, there are other matters when financial reporting is supplemented, and or when audit report is prescribed by laws and regulations. So these are the additional consideration that you need to take while accepting an audit engagement. So what happens when your financial reporting framework is guided by laws and regulations? You need to identify that this was the framework and this is the framework given by the that I work on. These are the framework that we work on. For example, accounting standard, and these are the accounting standard prescribed by the laws and regulations. You need to compare the two frameworks. You need to identify the conflicts, and then you need to give an agree with the management that you will be giving additional disclosures to resolve the additional requirements of the framework. For example, in case of a Companies Act, you are required to Companies Act says that you are required to use IGAP or AS, and you are also required to give additional information. So you need to compare the conflict and say to the management that this is the additional disclosure that you need to give in the financial statement, and this is the framework, and this has to be amended to bring in line with the laws and regulations. If management agrees to it, good enough. If management does not agree to it, we might need to consider our reporting. Like either we will issue a qualifying report or we will not issue a qualifying report. Going ahead, if the framework given laws and regulation suggest a framework that is not acceptable to the auditor, so what you will do in such circumstances? So what happens is you need to first of all disclose in the financial statement that these are the framework which is in conflict with the accounting framework. Then you will also have to amend your audit report and give a emphasis of matter that this was required by law and this is a conflict by law. And you cannot use the word presented fairly in all material respect or that the financial given statements gives a true and fair view unless required by law. So you have to agree all these terms with the management that you will be giving additional disclosures in the financial statement. You will be giving EOM in the audit report, and you will not use the following phrases which are required by law unless it is absolutely necessary and requirement of the law that you need to mention those phrases. You need to agree this pre-hand with the management when your financial reporting framework are not acceptable to you, and there are laws and regulations in place which says that you have to use those financial framework only. So that was the second part. The third part is what happens when an audited report is prescribed by laws and regulations. So there are government entities that you audit, and there are government authorities that have prescribed certain laws and regulations that the audit report should be in this format and it should give so and so things. What do you do? Because there's a standard on auditing says that this is how you report, and there's a government standard which says this is what should be different. In such a circumstances, you have to first of all uh, you need to identify whether you will be able to give the opinion that you desire in such a case, and whether there is a possible way to mitigate that risk, and there should be the opinion that you give, there should be no misleading in the financial statement. It should not, the opinion should not help, the format should not be misleading in the is such that it leads to misleading for the users of the financial statement. So you need to be very careful. These are the additional considerations, very careful that you need to uh, think on while accepting an audit engagement when those are prescribed by laws and regulations. So these are the three things that laws and regulation are prescribed when it is acceptable to an auditor, and what are the conflicts and how do you resolve it. When it is not acceptable by auditors, how do you resolve those conflicts? And lastly, when there is an audit report prescribed by the audit laws and regulations. So that was the entire essay 210, stating that these are the agreement. How do you accept or continue an audit engagement? Uh, with this, I hand over to Rishabh again. Rishabh.
Yes, Nishantji, thank you very much for your time and a very detailed presentation on Essay 210. Uh, do we have any questions from any of the members? Yes, I don't think so. I'd like to introduce C. Abhishek Ruya to give a vote of thanks for Nishant Nemani ji.
Hello, hello,
Yes, yes, Abhishek.
uh, hello.
Yes, yes.
सर क्वेश्चन शो करो अभी है पहले वाले.
हाँ हाँ क्वेश्चन शो करिए ना प्लीज.
ओके ठीक है सर. हो रहे शो हो रहे.
नहीं.
हाँ अभी. हेलो।
Yes, now अभी दिख रहा है. It is now being shown. Nishant ji,
So
can you
first,
see this question?
yes, I can see this question. So first question, in situation where component auditor perform group audit of India's subsidiary, basis industrial instruction received from overseas group audit to support the audit group. Is it mandatory to exchange engagement letter with the management of local subsidiary in India? So, Mohammed, your answer to this will depend. How are you going to, who are you reporting to first of all? Are you reporting to foreign entity or you will report to Indian entity? Secondly, how is the fee arrangement in this case? So your fees will be paid by local management or it will be paid by the foreign management. Thirdly, is it mandatory for you in the local laws and regulation to issue an engagement letter while auditing for a group instruction? So when you answer these three questions, then only you will be able to answer this whether you are required mandatorily to issue a uh, engagement letter in case of group audit. Second question, is it possible to prepare single financial statement while dual accounting frameworks such as Ind AS and IFRS? Difference, if any, will be highlighted separately. Okay, so single financial statement will be a financial statement. It is not a single entry system that we are talking about. When I say a financial statement, you will not be able to prepare a financial statement that is not tallied. So single financial statement is not a complete set of financial statement, but it is only a balance sheet and a P&L presentation. So I hope that answers my question, Bhavesh. Next question, can we have a dual purpose auditing standards such as ISA and US gas for auditing special purpose? No, you cannot have a dual purpose financials. You can have an accounting standard as per IFRS and you can have an auditing standard as per US GAAP, but you cannot have a dual auditing standards. It has to be completely agreed freehand whether in what framework are you going to audit, which accounting standard you are going to use, and which auditing standard you are going to use. You cannot have dual auditing standards and dual accounting framework for audit. So Bhavesh, I hope that also answers your question. Nowadays, MNC's clients are asking to include para on compliance with FCPA and EU data protection laws in our engagement. How will we consider such request? Uh, First of all, yes, I also faced a certain issue like this in the previous month itself, where MNC has asked us not including para compliance with EU data protection. So where I was asked to on data protection that I cannot transfer my data with the outside India without, or I cannot share my data with other parties or with any other parties unless I take a permission from the client. So that has to be pre-agreed with the client that this is what my circumstances will be. Under these circumstances, I have to share data and my laws allow me to share this data. I cannot restrict myself. This has to be pre-agreed with the client. And if this is not acceptable to you, you better not accept the audit. Next, going ahead, can we restrict our third liability of to third party in case of litigation to our fees in case of special purpose financial statement? Yes, you can. So this has to be pre-agreed that in case of a litigation arrived with the third party, this is what we agreed to. This is my liability towards the monetary component. We cannot restrict our liability towards the non-monetary component, but for monetary component, we can restrict our liability. That should be forming part of our GTC, general terms and conditions. We can restrict our liability stating that in case of any, how will we indemnify a client in case something goes wrong? So we will indemnify your client. It depends on person to person whether you are ready to take twice the engagement fees, you are ready to take 10 times, or you are only ready to take to the extent of engagement fees. That is again based on negotiation. So this is also can be, we can restrict our liability to the third party. But again, that should be pre-agreed and that should form the part of your engagement letter. All the questions that were asked as a part of this seminar should form a part of your engagement letter. Nothing, anything outside the engagement letter can lead to a litigation, can be misleading, can help, will be vague, and an auditor may face trouble in future. So to safeguard auditor and the management both, you should enter the agreement freehand and agree on the terms.
Uh,
Rishabh, I guess
I
that's were
think
all
all the
the questions.
yeah. Yes, I think all the questions have been answered. Thank you so much, CA Nishant Nemani ji, for your time and for answering all these questions. And it was an interesting topic for the day. Now I'd like to introduce CA Abhishek Ruya for giving a vote of thanks to CA Nishant Nemani ji. Thank you.
Nishanji, thank you very much. It was a great pleasure having you on a Sunday morning. And I believe after what all the cases had been happening with all the chartered accountants, engagement letter had been playing a very important role these days. So, and you had given a
Yes.
great light on what engagement letter means to an auditor, because many cases are also going on regarding NOC and all those things, and what all factors are need to be included in an engagement letter before signing up any audit, so that auditor is also in a comfortable position, and so do the client. So I would like really meant a lot. And Nishanji, it was great pleasure having you on board to give a highlight to all the members of the institute regarding the engagement letter. Thank you very much, Nishanji, and hope we have
You're
more
welcome.
such lectures on the same. Rishabh, you can.
Yes.
Thank you.
Uh, Thank you. Thank you so much, Nishant ji. Now, the second faculty for the day is CA Padmashree Crasto, and I'd like Abhishek Ruya again to introduce the faculty for the day.
Hello, ma'am. Good morning. Padamshri, ma'am. Good morning. How are
Good
you?
morning. I'm good, thank you. How are you?
Good, good. Long back we had seen you, so happy to see you back. I would just like to
Thank
introduce you on board. So Padamshri ma'am would be giving a lecture on documentation, and she's a ma'am is a partner in audit and assurance practice at MSKB and Associates LLP. She operates out of Mumbai office, and she has great 16 years experience over insurance, financial services, majorly, and also in manufacturing. She is in charge of various developments. She's actually into developments and making what you call templates and for various statutes and regulation. And she does standardizations of also reports. In fact, we had also been using her standard reports over the years. She is also responsible for quality assurance in audit and assurance services, which technically include deliverables, conduct of online reviews, code review of audit files, and thereby managing the firm risk also. So that also basically manages the risk, what all documentation is required and everything. She has a great in-depth knowledge of standards of auditing, quality standards, IFRS, company law, accounting standards, Ind AS. Also, she has worked for various IPO matters also. She has expert knowledge in preparing audit tools also. She imparts also training programs on technicals, quality methodology, APT, and other matters for professional interest. She is a great contributor to the WIRC publication also, that is Entonology on CAM and other reporting matters, model financial statements for non-corporate entities also. So that is a big profile, and many more if we lays down, so it would be a there would be different lecture on the same. So Padamshi, I'll take you to the same, and you can start your lecture on the documentation part. Thank you, ma'am.
Sure. Thanks, Abhishek. Thank you for providing the opportunity, and I look forward for more. It's always good to meet you again.
Great.
So from this, I think, take on to the session. Can you please confirm if you can see my screen and hear me clearly?
Yes, we can hear you clearly. We can also see you, and also your essay to 2030 audit documentation part.
Yeah, I will just adjust the windows and we'll start
Yes.
off in a second.
I think this is a perfect screen. You can continue the same.
Yeah, no, the visibility for me is what I'm seeing.
Okay.
Yeah, sure. So we start off with one of the most important standards in the standards of auditing, and in every standard of auditing there is a reference to this standard because this is the base standard for everything whatsoever we do. We do not manufacture anything as auditors, as professionals. We are only providing the services, and we always have this funda of if nothing is documented, then work not documented is work not done. So we always emphasize on this because it is the documentation that saves us ultimately in any kind of regulatory review, litigation, and any kind of matters. I was just listening to Mr. Nemani also, who was emphasizing that everything has to be in writing. All the terms, conditions, all the agreements with the client has to be in writing, with the third party has to be in writing. So that is the emphasis on the documentation. Kind of what I have done is put up the presentation in a way to run through quickly about the documentation requirements, certain do's and don'ts based on experience. Also, in the COVID-19 scenario, when we on and off keep working from home, so in that case, how to manage documentation and how to ensure that everything is there on file, either in soft form or in hard form or in some other form, so that we are not left behind. So we start off with the same motto that if things are not documented, then the work is not done, and the documentation has to be in a manner that it has to be the person with a reasonable knowledge should reach to the same conclusion as we have reached looking into the documentation, into our documentation. So if a file is being reviewed, it's not necessary that I sit beside them. My documents have to speak the same language that I have had thought, because there has to be a linking between thinking and inking. So that link is what we need to establish, and everything has to be properly inked. As per SA 230, the scope of this essay, it is auditor's responsibility to prepare audit documentation for audit. So it doesn't only cover audit, it also extends to attestation services. You can talk about a certificate, we can talk about tax audit, we can talk about internal audit, all kinds of attest functions, assurance functions, everything we have to document well. Even the due diligence or other kind of services that we provide, we always have to have end-to-end documentation. What is it that we have to do under this standard? It has to be adopted to audits of other historical financial information. That's what we said. Whatever kind of work that we do, we as chartered accountants, what that we are providing, everything has to be well documented. Additionally, laws and regulations may establish additional requirements other than this SA 230. What is it that can be an additional requirement? It's the law and regulation requirement that may be an additional requirement over and above the normal requirement. Specific documentation requirements of other essays do not limit the scope of this essay. So as we started off, SA 230, there is a mention of SA 230 in every standard, in every announcement, in everything that we do. There will always be a mention of whatever you have done, please document. So this is all pervasive standard, it's existing everywhere. So other essays, wherever they are talking about specific documentations, it will obviously lead. So I kind of put in a flavor of other essays also wherever possible to highlight few cases and scenarios. However, that's not all conclusive. We will have to look at specific documentations that are required. What's the meaning of documentation? It is maintained at 3 stages of audit work. This I have bifurcated into for the purposes of ease of understanding. One is audit planning, one is audit implementation, that's execution, what we call, and the audit reporting. So we always call it as planning, execution, and completion. That's how we divide our audit work. So one we do before going to the field work, one we do at the time of the field work, and when we do at the wrap up. So 3 different stages we will document, and we will throughout this presentation we will run through this planning, execution, and completion is the terminology that I have used completely. What does it mean? It means records of audit procedures that we have performed, relevant audit evidence that we have obtained to support the audit, and conclusions that we have reached, or the basis of conclusions and the conclusions that we have reached. What's a document in the context of this audit refers to which is required to be maintained by an auditor to record his findings during the course of audit. So what is required to be maintained? So we have this ever pervasive term in all the SA 700 series, that is audit report series, which is sufficient appropriate audit evidence. That's most important as AAE, what we call as sufficient appropriate audit evidence. What's sufficient, what is appropriate in the given circumstance depends on case to case basis. So we always have to have this professional judgment that we have to exercise whenever we look at the documentation. So the sufficient appropriate audit evidence depends from case to case basis. Just to give an example, if we have sometimes it so happens that we perform two tests and we are comfortable with the financial statement line item. For example, borrowings, we take a direct confirmation, we look at the schedule and then few other tests and we are comfortable. But in some other case, even after doing hundreds of tests, we do not get comfortable. So that's sufficiency of document, sufficiency of evidence. So in case if we think that there is some kind of intentional misstatement that's happening in one of the matters, then we do not stop at 2 rounds of documentation or 2 rounds of inquiry or procedure. We will ask for more. We will ask for enough documentation. But even after doing 5 rounds of discussions, 4 rounds of looking at documentation, we may not be satisfied. So that's when the sufficiency and the appropriateness of the audit evidence depends on case to case basis. So we have to be very careful and on what is necessary in which case and how we have demonstrated that the said things are properly documented in the said case, and what all we have got properly or we have not got is something that we always have to keep our eyes and ears open. What are the examples of documents? The documents now include of the electronic documents also that we receive. So electronic documents is something that will get included under documents as such. All types of work papers that we prepare, signed agreements that we have, any videos, pictures, videos, we can say that stock count videos and things like that, pictures in case of damaged goods or some other things, spreadsheets, the transcripts if we have anything, and all the correspondences. So all the correspondences with the client with respect to certain audit, everything will form part of the documentation. What are the essentials of documentation? Number one, it helps us in planning an audit. It assists in the supervision and review. It results in better conceptual clarity, clarity of thought and expression. It facilitates better understanding and it avoids misconception. It supports evidences of work performed and compliance with standards. Yeah, that's too much of a theory. We will go with the examples as we go ahead. What's the nature and purpose? Let's put it this way, that it always actually helps us in safeguarding our interest, and it always safeguards our interest. It comes very handy in case of regulatory reviews. It is the evidence, it is the audit evidence and the documentation that you can substantiate that you have done the work. Without documentation, you cannot actually survive in any manner. What's the form and content of documentation that we are looking at? Form and content of documentation is not fixed, so it depends on case to case basis. So the various factors that we can consider here is size and complexity of the entity. So let's take an example for each of the blocks. Number one, size and complexity of the entity. If the entity is small, the testing is small. So let's take an example of a trust. Okay, so where there are say during the year some 20 donations received and the money is spent authenticately towards the objective of the trust, which you can one-on-one correlate, see, and then the matter is closed there. So what is the complexity, what is the size, and what's the nature of the entity? It's quite small, and the documentation accordingly is very naive and very small, that is required here. Now let's take another example. Say if you're auditing a large company, a very big chain of departmental store, or a manufacturing company which is geographically spread out, then the size of the company is larger. Unit by unit you may audit. There may be branch auditors, there may be unit auditors. You need to consolidate if there are complex audit issues like complex accounting or auditing issues like accounting for 109 Ind AS 109, that's a financial instrument, or measuring an ECL and things like that. So all these will involve much more complexity, and a detailed documentation will be required in that case. Nature of the audit procedures to be performed. In case one that we took as an example, the nature of the audit procedures are quite straightforward. There's nothing much complex over there, and we can easily actually accomplish and document everything. And in the second case that we saw, we have to think about how to go about it. Okay, if a company has 15 units, how to document it, whether I should take materiality on a whole, whether I should split the materiality unit wise, whether I should think about adjustments unit wise, whether I should look at overall basis. So there are n numbers of considerations that we need to think about, and then we need to decide. Identified risk of material misstatement, significance of audit evidence obtained. Uh, we all these days do not do financial statement line item based audits. We no more do that. We do on the basis of standards of auditing SA 315, which is risk based audit approach. As you all may be aware that this SA 315 is undergoing a complete change internationally. So revised ISA 315 is being put in place by IFR, and then it is stage by stage being implemented by various countries. So sooner or later that's going to come here also. So this risk-based audit is something that's most important. So how do you identify risk? Various firms have various methodologies, but SA 315 basically says that based on the nature and timing and extent and the likelihood and the impact on the financial statements, you identify the risks that will affect your audit. So say for example, going concern, you can say that if the entity is in trouble, then there is a going concern issue. If there are indicators, then that going concern is a risk. And then if you identify going concern risk, then it is an entity level risk, and you will have to address it at the entity level. There can be certain things like an activity level, assertion level risk. For example, inventory not being correctly accounted for. That's a assertion level risk. So how do you identify and how do you actually assess that risk, and how do you respond to that risk? The significance of the audit evidence that is obtained. So if we take the same inventory as an example, physical verification of inventory, that had been a big problem last 2 years because of the restriction on the mobility of each of us. And then we were not able to send our people for verification, observation of inventory verification and things like that. So what do we do alternatively is something that we will have to think about. So that is why again the sufficiency and the appropriateness changes, and that is why it is always it is never a clear answer, and it depends on professional judgment and time to time how we look at things and how we actually get onto solutions. The need to document a conclusion or the basis for a conclusion not readily determinable from the documentation of the work performed or audit evidence obtained. So what we are talking about is basically the amount of professional judgment that is involved. We just now gave an example of we are not able to being doing a physical verification of inventory. So what do we do alternatively? Rollback procedures, roll forward procedures, appointing another CA firm locally. The management may have taken some stock take, and then documenting that, getting a comfort over it, discussing with the other person. So all these are certain conclusions that we have reached on the basis of certain exercise of professional judgment, and this doesn't come off the shelf, and these are derived solutions that will suit each and every place. Audit methodology and tools used. So most of the firms also use the tools. So various firms have various audit tools that are developed. There are some ready to use audit tools also available off the shelf in the market, which people pick and use. So whatever methodology you're using, so essays give you the guidance. Basically each firm will have its own methodology, that okay, materiality can be on profit based, it can be on revenue based, it can be on asset based and things like that. And they also define a percentage of 3 to 5%, 5 to 7%. So whatever is your methodology, whatever it is based on, what are the factors that are underlying, all these things, if you want to compile at one place, that's what your methodology consists of. So say for example, if our firm has a methodology wherein it says that either you can take profit after tax, or revenue as a benchmark for materiality, and then for profit after tax it gives it gives a range, and then for revenue it gives a range, and all those things, what are the decisions based on, we have to issue guidances, and then we have to ensure that the documentation is in accordance with it. Or simply if we want to go by SA, then we can pick up from the application guidance itself. So SAs will have this columns of application guidance. So from that application guidance, there are illustrations that we can directly pick up, and then we can start using that. And if we are using the tools, then we have to ensure that the tools are foolproof and they are actually having all the integrity that is required, because these days if you see in the reviews of NFRA, QRB and all that, they do question the integrity of the tools itself. Coming ahead, documents are segregated into permanent audit file and current audit file. We all know this. From ages, we have been doing this. Permanent audit file, we have the contents of this document, which is actually updated from time to time. But this is kind of a permanent document that it is kept. So it basically contains all the MOA, AOA, deeds, bylaws, regulation in case of company, firm, cooperative society, engagement letters with the company, communication with previous auditor. As we now know that the appointment formalities happen once in 5 years, so permanent audit file can have that entire appointment formalities, because ratification is also not necessary. So once you are eligible for 5 years, once you are appointed 5 years, you are there for 5 years. So those are the things that will go into the permanent file. Organization structure of the client, analytical review, management letters, legal documents like prospectus, leases, sales agreement, minutes of meeting, copy of audited financial statement along with audit report for previous 3 years, and some tax returns, tax litigation matters, then few of the important agreement synopsis. All this will form part of the permanent audit file. Current audit file, what will this contain? It will contain all the pieces of the routine audit, like opening TB, sales purchase vouching and verification, process note, walkthrough, control testing, management control testing in case of IFC, expense and income related documents, cash and bank related documents, debit and credit notes, ROC documents like appointment letters, audit engagement letter, list of director, shareholder, list of partners and PSR, statutory registers under 188, 189, and things like that. Let's take a look at what are the items that we generally document. One is balance sheet and P&L items, and another is finalization papers. So when we talk about balance sheet items, in case of share capital, what all we are looking at: any fresh issue, buyback, bonus issue, related documentation to that, loans, what all we have verified, secured, unsecured loans, the covenants, the detailed disclosure that we have to give. As per the new schedule, we have to dig deeper into it as to whether the company is a willful defaulter, not a willful defaulter. All those cases also you have to keep it documented. Statutory liabilities, all kinds of taxes, PF, PT, TDS, VAT, CST, GST, everything that is applicable to the company, payment details, because this is something that we report in the CARO. FA and intangible, we have all the addition, deletion, whatever samples we have verified with depreciation calculation. In case if it is deviating from schedule 2, then the technical evaluations, investments which can be current, non-current, and the detailing thereof, outstanding and prepaid expenses, whatever kind of invoices, supportings that you have verified. What are the finalization papers that we talk about? Intercompany balance details and confirmation that we generally do, direct confirmations, the CARO checklist, the various checklists that we have: SA checklist, accounting standard checklist, Ind AS checklist, CARO checklist. In case of tax audit, the clauses and their workings, audit adjustment sheet, that whatever we have identified, adjusted misstatement and unadjusted misstatement, review by senior, review by partner, management representation letter, signed closing TB. All these will form part of my current audit file. So some of the things that we do on routine audit: how do we do the opening balance testing, opening TB, where did we get it, how did we group it, how did we make it into a schedule, what are the cross referencing over there, the various P&L balance items and everything that we have actually verified together, the cash balances, bank balances, the direct confirmation, as well as cash verification, surprise verification if you have done, debit credit note details, and all other supporting that we come across in case of this thing. ROC documents we discussed in brief, like what all are the ROC documents that we generally look into. Balance sheet items also we looked into very much in detail, all the supportings and all the these things. So just to aid and just to further elaborate, um, there is a uh, there is a checklist that is issued on each and every standards of auditing. There is a compilation that is available issued by the institute. You can pick that up and start your own set of documentation, or you can develop your own standard template. So if the firms are of larger size, it's better to keep a track of all the latest developments that are happening, and then keep developing on those lines. So the development of various standards and templates is something that is necessary. Something like a review memo from the senior, review memo from the partner, management representation to have certain standard clauses, ML format, audit report format. All these things may be very necessary to maintain on and off, because this is something that's very basic, and if anyone in the firm goes wrong with respect to that, it may have a firm wide implication. That's why it will be very necessary to have all these things in one place. Now let's talk about nature, timing, and extent of audit procedures. What is necessary when we are talking about documentation? We generally use this term as nature, timing, and extent of audit procedure. How do you classify what is the nature and what is the timing and what is the extent? So first of all, we need to identify the characteristics of specific items and matters that are tested. Let's take an example. So there has been a huge amount of addition to intangible assets during the year. So the intangible assets are in-house developed. So I'm not going into the classification and the accounting per se, but just saying that everything is okay, and then we are having a classification and we are having an addition into the intangible assets of a larger item. So that will be one of the items that will be focus area, because that needs to be properly looked into the capitalization, what is allowed, what is not allowed, how is it capitalized, all those things are to be identified. So at the beginning of the audit, when we do the planning of the audit, we do the risk identification, we do the preliminary analytical review, we identify the risk through understanding of the entity, understanding of the internal controls, we do the process notes, we do the walkthroughs. All those things when we do, we have in mind what are the things that has to be seen much in detail. It may be on the basis of a preliminary analytical review, that which are the figures that are actually moving in too much, or based on understanding from the entity when we talk to the CFO, CEO of the company, or to the financial controller, whoever in the company, when we discuss, we identify that okay, these are my focus areas. So we see where are the risks that are sitting. So in case a company is having huge loss of orders due to COVID-19, we know that there is a going concern issue, and we know that there may be falsification of accounts on account of sales, or on account of profits. So we have that specific thought process. So identifying the characteristics of the specific items and what is the matter that is to be tested, we need to create an accountability there, and then that will be facilitating the investigation of exceptions and the inconsistencies. So then we have to understand what is the threshold that we are okay to understand, how do we want to go about it, what are the additional things that we have to look into it. Having seen all this pattern, then we can develop what all the things we have to do. So in this case of intangible asset, we can take a step back, go to the accounting standard, look at the requirements, see each and everything that is matching, then certain estimates, projections that are drawn by the management, we have to evaluate that, because we have to challenge the management estimate also, and then document how we have done that, and then come to specific compliances as well, and the disclosures. And that's how end to end we can ensure that the documentation is done. One of the things that we always end up doing is that when we do the planning, we do it well, but then when it comes to execution, someone does the execution and someone fills in the checklist. So the holistic approach will be like, someone who is doing a PPE area should do thorough reporting of PPE checklist also, accounting standard Ind AS of PPE also, so that there is a holistic approach. Because if there is disconnection between the two, then the documentation will not go so proper. and then one may end up doing something which is actually not in line with what is supposed to be done, because we all are under so much pressure to close the accounts and to finalize the accounts and file up and file the income tax return or file with the ROC, or as the case may be. So there is a lot of pressure that comes at the end. So starting point are requirement list. Please check the requirement list, make a requirement list that's quite comprehensive, and then it is tailor made to the accounts, to the specific client, and ensure that those requirements are properly available. Now with the revised schedule 3, there are so many things that you have to do. So in the past sessions that I have spoken on schedule 3, one of the things that I always insist on is if possible, for at least for the larger companies, before end of March, maybe December end or January end, do a hard closure based on the requirements. There are lots of regulatory requirements on the schedule 3. So just do a hard stop to hard closure to see whether all those things are possible, not possible. So your requirement list now has to be so thorough and so heavily equipped, is that the client should not be having any leeway to say that you raise this requirement last minute, I'm not able to give you, now you are in a fix what to do, and then all that kind of situation is avoided as much as possible. So start with the requirement list, plan well, add to the requirement list, keep following up with the client, ensure that the closure happens smoothly. Yes, it's not in our hands, I understand very much, but then as far as possible, at least the larger clients, if we can plan out well, then the smaller clients we have time to manage. The next thing that we would talk about is who performed and date of completion. So what is nature? Nature is whether it is simple, complex, how do you handle it. Timing is your documentation or the review or the testing or the audit procedures or the review procedures, as the case may be, has to be covering the entire period. So it should cover the opening balance, it should cover the closing balance, it should cover some samples throughout the year. So generally, in the interim, when we do till December or January, we end up, and then February, March sample is not there. So that kind of situation should be avoided. So the sample should be spread out throughout the year. You should do opening balance testing, you should do closing balance completion testing, which we call as for financial reporting close process also. So the timing has to be spread out in a manner that the sample is representative and it is not cut short. And then the documentation has to have the specific pinning down of who performed the test and what is the date of completion. So basically at the time of audit planning, what we talk about is audit strategy. Audit strategy is, okay, when will we do TOC, when will we do the test of details, when will we do analytical procedures, what type of documents we will get, what are the things that we are going to look at, what is sufficient, what is insufficient. All these questions have to be plotted, understood, answered, and then we should go ahead with the testing. In case of complex IT systems like SAP or ERP, then you will have to bring in an additional element of this ITGC also. So that has to be done first. So we can start off with the planning of the audit strategy, do a walkthrough, do a process understanding, then do the ITGC, and then come to the TOC. Yes, all these elaborate steps are not possible in case of smaller clients, but yes, in case of medium to larger clients, this is the way we have to do, because ultimately we have to document everything step by step. The documentation also has to have allocation of responsibility. If we have 6 members in the team, we have to allocate who will do what, and then we have to have monitoring and supervision. So the documentation also has to contain who performed and what is the date of the completion. So that's very important to ascertain that who did it and who reviewed it. So who is the maker and who is the checker. Within the audit purview also, we always need to have a maker and checker. It should not be a single person who is doing everything and then concluding on the audit as well. Reviewer, date and extent of review. This does not imply that each working paper should have evidence of review. So SA 220, which talks about the quality of the audit, the quality control on the audit, that does not say that every single working paper has to have evidence of review. However, on a larger scale, everything has to have maker and checker concept. So it has to have, like, who has reviewed this, what is the date of the review, what is the extent of review. So for example, when I sit with review, certain areas will be very much in detail and certain areas will be broadly understanding itself, because the other person who is a detailed reviewer must have done more detailed work. So there will be exception basis review on certain areas, and there will be detailed review in certain areas. That's what we always manage, and that's what we always do the rope work on the basis of what is important to us, what is critical to us. For example, disclosures is something that we all look into more detailed. Important areas is something that we will all look into in more detail. A provision for tax is something that we all look into more detail. So these kind of things that we have always manage, we need to explain why we did it, we need to write down what we did it. So it's always like there are so many things that is running in our mind, but all those things we don't write on paper. What's required more is we need to put down everything on paper. Few of the things that are do's and don'ts, like enable the conduct of quality reviews and inspections. That is like if you have a EQCR review, so most of the firms will have, in case of a listed company, they will have one more partner who will review the entire file before sign off. So you have to evidence everything. uh, then enable the engagement team to be accountable for its work. They have to be made accountable, whether it is article or whether it is a junior staff, they have to be made accountable for the work that they do. Enable analysis of various account balances through comparatives and corroborative evidences. So external evidence, internal evidence, how do you analyze it, how do you put it onto paper? That's something that you will have to look into. Retain record of matters for continuing significance even for future audits, something like a subsidy, something like a tax holiday, something like an agreement is made for 10 years, shareholding, promoter agreement, shareholding agreement. All these things are relevance of continuous matters. So few of the things from the current can also go into the permanent later on, so that it is given, it is available for review later also. In case of external inspection in accordance with legal and regulatory requirement, for example, if it is a bank or if it is an NBFC, there can be an RBI inspection that may happen. So one of the things, if you look into this NFRA comments, is that they have specifically said that the audit file did not contain evidences of how the inspection results are looked into from the financial statement angle. Just let's take an example. In one of the say in one of the NBSC, if there is an inspection by RBI and if they have specifically commented on the ECL provisioning, the percentage and the calculation and things like that, so we have to, because it is having a financial implication, we have to take that observation, discuss with the management what is the impact, and then if there is any impact, what is the adjustment that we have carried out to the ECL estimation, and accordingly how is it impacting the financial statement. That's how our documentation should be. It has to have specific columns as to how we have catered to each of these things. Without that, our documentation will fail. Some of the things that we should not do is that notes that reflect incompleteness. So anything that's incomplete, highlighted, we generally, juniors, what they do, they will open an Excel sheet, they will ask, they will do some working, and then they will put up comments like ask ma'am, ask this person, ask that person, some client person's name, this, that, and all. So the cleaning up of the document also has to have duplicates of documents. So there's version 1, version 2, version 3. So clean up those things and keep the final version with the relevant workings, and do not keep multiple copies, which give you trail of what has happened. You have to keep the trail of things that has happened, but not multiple documents. Previous copies of documents corrected for typo errors or other errors. So this is generally happens when audit report comes to us, we have those reviews done, so final copy is to be kept along with what all has been changed as a note. So all these things we can note. Oral explanations have to be in writing. Whatever we discuss with the clients, we have to make documentation, and we have to create it as notes and put it on the file. So audit documentation of smaller entities, as we discussed, is generally less extensive. However, it has to record various aspects of audit together in a single document. Say, for example, in a larger entity, audit strategy itself may be a larger document which has detailed this thing. Materiality can be a separate document. Allocation of work can be a separate document. But in smaller entities, all this can be combined at one place, and a shorter document may be made. For example, understanding of the entity and its internal control, overall audit strategy, audit plan, materiality, everything put together. So I think that's how the overall feel of audit documentation is what SA 230 gives us, and it depends on case to case basis. Few of the things that are specifically impacted due to COVID-19, I'd like to just touch upon these things because these are from last 2 years, very very relevant. The two important aspects of audit evidence is sufficiency and appropriateness. So what are the things that we have to actually take care of when we are talking about this COVID-19 scenario, where half work from home, half from office, client from home, client from office, whatever, all permutation combination that we have. We are able to travel, not able to travel, not able to send our people out station, taking the documentation on OneDrive, taking the documentation on G Drive and things like that. So few of the things that we all have to keep in mind during this COVID-19 stage is what I have tried to gather over here, which will be a quick reminder, also touching into specific areas where we have to be more tight. Execution of engagement letter. So one of the institute's announcement says that we can do digital signature, and most of us are using digital signature for audit report and financial signing, right? So even engagement letter can be digitally signed. So execution of engagement letter on timely basis, because now everything is on electronic media, almost everything is passing through mails and this thing. So date trail is very important. You do not have physical signing, so date trails are very important. So ensure that things are executed on time. Execution of engagement letter is the first thing that you will look at, and because that's the starting of everything. And engagement letter, I think earlier speaker has very much discussed in detail as to what are the requirements, what are the things that can safeguard us, how we have to go about engagement letter and things like that. Identification of relevant risks. So one of the things that we always face is a challenge with respect to meeting. So we all have virtual meetings. We may have meeting on Microsoft Teams, Citrix WebEx, Zoom, various modes, Skype, whatever. So whatever meetings we have, we can make an agenda, we can make a minutes of meeting, circulate it to all the people, and then we have to note down all the minutes. That's something that is very important. Identification of relevant risks through UTE, that is understanding the entity, understanding of the internal control, process note, walkthrough, everything. When we collect all these things, so all these things will give us the relevant risks. So how did you identify? The discussion on identification of risk is something that we have to document properly. In case clients to whom IFC is applicable, the process flow, that earlier we used to go and sit near the client person, and then we used to do the process flow understanding and take screenshots of the walkthrough. Now we are doing it over Zoom, over MS Teams. So we have to take relevant screenshots. We have to even record the timing of when we did all these things and how we did the understanding. All these things have to be properly documented. That becomes a necessity by default. Then access to client system may be a challenge. For example, when we used to go to client's place, they used to give us a what do you say, desktop or a laptop at their place. Now we may not be getting that, so we are doing it through Zoom call and other things. Few of the clients give us one dedicated laptop or something, but then that is very very less. I can say it's not even 1% of the total population. So how are we getting access to, how are we getting independence access to retrieve certain data? We also had this thing that we used to have this desktop and we used to extract the samples ourselves, but then now we are doing it over the call and things like that. Is our independence or something lost because of that? That is something that we will have to look at, and we have to step by step document the entire process as to how we got the access through the system. What are the session details that we actually entered into? How did we extract the data? Everything is to be documented, and how the samples were selected, that's also to be documented. Controls, as we talk about process, controls is also very very important. Now during this period, many of us are working from home. Same is for the client, that many of them are working from client. So what has happened is that there are many processes that have undergone change. So few of the approvals that used to happen over table to table or from person to person, in person and things like that, that has changed. So there are alternative controls that are put into place. Also there are system changes that are made so that things are reflected in that manner. So we need to identify what was the control that was existing earlier, what was the control that is now missing, what is the alternate control that still makes it going, and then ultimately whether that control is comfortable, not comfortable. That means whether we are getting comfort or not getting comfort. That is very, very important, because that is something that will be seen during any kind of review. That's something that will be of prima facie importance. If there is any changes in control, and if there are any alternative controls that are built in, those things are very, very important to be seen. Also additional controls, in case there are additional controls that are implemented, that is necessary to be seen by each of us. And when we talk about control, we always talk about three things, that is design, implementation, and operating effectiveness. So we have to look at all the three aspects of this for all kinds of alternative or additional controls that have been put in place by the respective companies. Virtual meetings, as we spoke about, everything is virtual now. So recording the minutes of the meeting, who are the people present, and then confirming through email and then documenting is something that's relevant, because there should not be any kind of misunderstanding. So that becomes very necessary in case of planning stage. Few of the things at the execution stage. So when you used to go there and do the field work, it was a different field. We are sitting at home and doing the things, it's a different field. We are sitting at home, our teams are sitting at home, the clients teams are sitting at home. So we all have to coordinate, we have to get on those, so getting the samples, verifying the supporting, so they are giving the dumps in the OneDrive, Google Drive and things like that. So the authentication of the data itself. So let's start with that. Access to client system, as we saw, is the first challenge. Getting access, getting the entire thing, and extracting the sample. We need to establish that we have done that properly. That's point number one. Retrieval and access to supporting like OneDrive, FTP, VPN. We have to put a note on the file to say that this is how it is done. Entire procedure we have to document. One of the things that the standards say is IPE. IPE is information produced by the entity. So when we look at the guidance note on IFC, it talks about IPE, information produced by the entity. So before starting off any of the tests, we need to check the integrity of the report that is generated. For example, balance bucketing of accounting receivable that is retrieved from SAP system. We have to do certain tests like GL matching, picking a few invoices, that whether the 6 months to one year is properly sitting in the set bucket or not. All these things has to be checked by us. That's IPE testing. So we need to look at that IPE testing. So in this case, the sample is being retrieved from there. We have to put a note, we have to write how the sample is retrieved, and then we have to look at the IPE testing. When you look at the IPE testing, very, very important, any document, any audit evidence, we also always have to ensure relevance, reliability, and authenticity. Relevance means whether it is relevant or not to the given circumstance, whether it is forming part of the evidence or some irrelevant document that is given. Reliability, whether it is from the authentic source or not, or whether it is verifiable, not verifiable. Authenticity, does the person has the authenticity to provide me this document or otherwise. So these three things have to always to be kept in mind. Access to information like FAR, that is final analytical review, inventory records, investments, what are the alternate procedures that we need to perform, and documenting with time and date is more important. So investment verification, the cash verification, how do we do this? Can we do this over video call? So there are guides that have been issued by ICI with respect to each of these things. We need to study that, we need to take pointers from that. We need to make checklist if our staff is going to do this, and then we need to document this very much appropriately. Entries passed on account of misstatements, we need to keep an eye on whatever we have identified the adjustments, whether all those entries are properly passed. Taking copies of these JVs, because everything is through email and everything is through screenshots now. Access to secretarial records, so this is one big problem, because in the first cycle we all saw that many of the secretarial registers were in the office and it was not accessible. Someone had to go there, scan there, and some companies could not even send the scanned copies because of the confidentiality issue. Then what is the alternative method that you have verified it? So over video call it was shown and things like that. So all these things have to be properly documented. In case of completion, few of the important reminders for completion. What's it? JE testing. So JE testing, in JE testing, what do you do? Because that is one of the major tests to ensure that the management override of control does not exist. So JE testing, what do? You need to do end-to-end construction of the JV, dump of the JV, analysis for various categories of JV, like round figure JV, 999, past during holidays, past after office hours, and all that stuff. So ensuring all those things through extraction of JV and performing all those tests is itself a task. The next important and very interesting thing is the tracing, posting, casting of financials. We were always used to doing this sitting across the table. One person is calling out the numbers, another person is doing it. Now it's completely on Excel, and there have been instances where there have been casting errors because of Excel roundup also. How do you document this? So using the functionality of Excel, by using tracing dependence, tracing precedence, and things like that, we can document this, or putting symbols, or else the traditional way of taking a printout at home and ticking everything and then writing the notes you can scan and upload. So these are actually practical difficulties, challenges that you will face, but then you will have to ensure that all these are documented, because there is no two way to it. There is no discount to it that okay, you are working from home, these 3 steps are exempt. No, all these things are as mandatory the way your audit is going on. Issue discussions, now that again, most of the issue discussions used to happen across the table. You used to visit the CFO, CEO, and you used to discuss the issues, or the promoter or the owner of the company, director of the company. All these things are also happening over calls. So ensuring that relevant people are involved in the discussion, proper discussions are happening, agenda to the meeting, minutes of the meeting being circulated, the client confirming all these issues and things like that. All these things become very relevant. So documentation of all the minutes are very important. Another thing is within the team, when we review. So if I have a team of 5 people, I am reviewing an audit. So how do I document? All my review points have to be noted down by one of the persons, and then he has to provide me all the resolutions. I have to check and then confirm, and then that has to be documented on the file. All these things become so necessary and relevant because we are sitting away from each other, and then we have to show that we have done all these procedures, because at the end of the day, we are not manufacturing any product, and work, if not documented, is not done. We go by that funda, and we have to document all these things. Finalization process, for example, the finalization of the financial statements, the notes, other documents like SA720 reporting, supporting documents like board minutes and board of directors report, the management discussion analysis, draft copy of all these, analysis of all these things, discussion over the FS, certain disclosures that the juniors may miss out, which we point out, or during review we give all that qualitative aspects of, there are different fonts, the size is not proper, membership number not written, FRN not written, audit report has a spacing issue. All those things, whatever we do one-on-one, all these when we do over the phone or sitting away, all these things getting documented is also very important. Closing entries. So in case client is obviously, when everything is closed, the closure entries that the client passes and the books are closed, and then it is taken forward. So that entire process which used to be done in front of our eyes, that is now being done distance. So you may have to have that screen visibility, and then you will have to look at how it is being done and whether everything is proper, and the final closing trial balance is coming to you over email with the grouping and with the schedules. So all these things otherwise, which used to be much more simplistic and much more easy flow, are all to be rethought about, and they have to be looked into very much in detail. How to document in the current scenario? We are placing a lot of reliance on the scanned documents, so we need to ensure that the scanned documents are authentic, and there is no handling of that scanned documents in a intentionally wrong way. So we need to ensure that those things are properly coming to us. So it has to be confirmed by someone that okay, these scanned documents are proper, and then you go and start working on it. Consider the reliability of scanned document and whether the document is faithful in form and content to the original. Something has not been hampered with the document is something that you have to ensure. Include a point in your management representation regarding authenticity of the scanned documents. That's very important, because these are very specific things that we have to take in management representation, because most of the things are not happening in front of our eyes. So we need to ensure that the management properly represents this to us in writing. Consider controls that management has implemented for converting hard copies into electronic format. So scanning is one way. Another way is like documents are directly converted by a software into, because people have this storage facility and other things. So in case any such processes are being used, please go into it, see the details and how these things are done, and then ensure that the authenticity of document is not lost. That is, the form and content is not undergoing change in the process. Validation of completeness and authenticity of scanned documents. That's what we are again and again stressing upon. Inquiring with the document owner and person who has scanned the document. So there has to be an inquiry that we will have to do, and then we will have to document that. And then we have to review the source document either through a video call or something. Few of the procedures that in the current scenario has a different flavor to it. Physical verification. So we need to plan in advance. We may be able to visit the visit for the observation of the physical verification. We may not be able to visit, so we need to plan in advance whether we are going to visit, we are not able to visit. If we are not going to visit, what is the alternative procedure that we are taking care of? Are we doing a video call? Because video call itself has detailed protocols that you have to document, without which that evidence is rubbish and that cannot be accepted at all. You have to have the geotagging of the place, you have to have the division of the place, you have to document each and every step, how you started the video call, which is the location, and everything, and then how the document is stored, because it's quite possible in an inventory verification one side is shown and then that side is again shown of the go down, saying that this is second bay, this is third bay, because everything looks similar also. So all that risks that you run, so you will have to plan for it, whether you are doing it yourself, whether you are delegating it to another firm of chartered accountants who is your associate, or your relation, your person who helps you, or the client is doing it and giving you a report. Then how are you actually ensuring authenticity of that report? In case if you are planning alternate procedure like roll forward or roll back, where the management has done it, how much document are you going to test? 100% on a sample basis? What are the things that you will see? Raw material, WIP, or the finished goods, or quality, or ABC category, only A and B category and not look at C category. So all that planning has to come in place, and you will have to think about it thoroughly, because again December end and March end is the place where this physical verification and other things happen. So you need to sit back and think how much is it that you are going to look into, and how are you going to approach these things, and how are you going to document this, because all this is also given in the guide that is issued by ICI. You need to go through that step by step and ensure that your documentation is complete in all this respect. So the entire alternate procedure, the date, and what are the procedures that you have performed during this thing. Alternate procedure, as we spoke about, reliance on cyclical counts, internal auditor, other auditor, virtual attendance, inventory held by third party, obtain direct confirmation. All these things can form part of your alternate procedure. In case of completion, all these things have to be taken together and put together in one string. So let's take it this way. So there is one more aspect to discuss, say 505 verification, direct confirmation. So earlier we used to document everything in direct confirmation. Now we are not able to, we are able to communicate through email. So how do we send the confirmations over email? It is allowed because that's an electronic document and that's allowed. How do we do that? We have to have a standard template. First of all, emails on Gmail and Yahoo Mail are largely considered to be not relevant because you can create it and then you can answer it. You have to check the authenticity of the email itself. So the domain verification has to be done. So you have to think about alternate means, or there are portals available. I think ICI is also tied up with one of the firms which provides that easy convenient way of sending the confirmation. There are other websites also like confirmation.com and things like that. All those things that you can make use of technologically and you can send the confirmations. You have to ensure that how you have selected the sample, whether you have verified the email IDs, the domain verification of the email IDs, whether it is sent properly, and then the receipt, whether it is directly from the email ID that you have received, authenticity of the email, if you have sent a follow-up, how have you sent a follow-up, and all these things you will have to actually document in detail. And everything, when you have to maintain a control chart, like when it is sent, to whom it is sent, what is the timing, when did you follow up, when did you get it, balance matching, not matching, reconciliation, no reconciliation, then whether it is to be qualified, modified, everything. So all the types of physical verification, whether it is cash, whether it is inventory, whether it is investment, or direct confirmation of debtors, creditors, loans and advances, and all kinds of other balances, everywhere you will have to consider all the alternative procedures very much in detail and ensure that end-to-end things are there in place and all the steps that we have done are properly documented. If we get sufficient appropriate audit evidence, then it may go to other matter paragraph as per SA 705. So you have other matter paragraph, sorry, SA 706, you have other matter paragraph, wherein other matter paragraph is relating to audit and auditor's report. So you can mention that physical verification we were not able to attend. We have done the alternate procedure and we have done we have obtained a comfort. However, if you do not have a comfort, then it becomes a modification of audit report, that is, it's a qualification as per your audit report in the audit report. So it may be physical verification of inventory, investment, cash, any relevant PPE, or direct confirmation of data, creditor, loans and advances, deposits, any kinds of balances. So all these things are specific areas which we actually used to do physically. All these things will have to be taken care of alternatively, and we have to ensure that end to end, step by step, all the documentation is available very much there. If these things are not available, then your audit becomes incomplete. There is an announcement by ICI which talks about use of electronic signatures for signing the audit report. Reference to applicable law. So SA 700, the paragraph says that in some cases law or regulation may allow for the use of electronic signature. IT Act 2000 contains provisions regarding use of electronic signature. So considering provisions of IT Act and Indian Evidence Act, so ICI has concluded that we can use DSC for the purpose of signing of documents. So we do sign audit reports, financial statements by using DSC, even certificates, engagement letters, everything. Because it is DSC, we have to be sensitive about the timing, because it is not a hard sign where you can put a date of yesterday and you can sign it still today, because of the logistics that it is under signing by the director. If you're planning for an electronic signature, you have to ensure that it is available today itself and it is available in detail, and then you do the final checking, tracing, posting, and then do a digital signature. So that's something that has become a norm of the day today. Letterheads on soft copies and digital signatures, all these have become handy, but then there are a lot of it that is being generated. So you have to be very careful of what is being generated and what is reaching where. So that's a control. You have to have one person in the office has to have control for one person who is signing. That's very important. Also, UDIN, like both for manually and digitally signed report certificates, anything that is being uploaded, we always have to have the UDIN also. So the finalization of the audit itself, I think 2 days before, we have to ensure that all the logistics are in place so that we can generate the UDIN on time. We can generate, we can put it on the soft letterhead, and then we can do a digital signature as well. So generating of all these documents together is something that gives the authenticity of the document, and all these things to manage itself has become another level of task these days. Management representation letter. Having discussed about documentation so much, what does management representation talk about? So SA 580 talks about all the management representations that one has to obtain. So management representations are forming part of audit procedure. Basically, it's not that we have taken everything from the management representation so we are happy. We have to perform our procedure, and additionally we have to take management representation. So the standard management representation for every financial statement line item, whatever we obtain, and specific management representations that we obtain, for example, something for the capacity, something of the plant, something for PP valuation and things like that. Apart from that, there are other management representation that we will have to look into during the pandemic. So what is it? One, authenticity of documents is something that we talk about, that we spoke about, that everything that is given to us, a proper scanning and everything, there is no alteration to the form and content of the document is something that we will have to specify. If there are larger areas that we are looking at, modes of communication like FTP or VPN or OneDrive, then we have to take a para in the management representation regarding the storage facilities and how we are handling that also. That becomes very relevant for us. Then we have documentation with respect to going concern assumption. So going concern assumption is something that's on us super high these days. There are many companies which are actually struggling to survive. There are many companies which are having support from their holding companies or other companies, and they are surviving. So evaluation of going concern as per the COVID documentation of ICI, the guidance that has come out, it talks about going concern in so much detail. So the assumption of going concern is to be validated, and the note from the management is to be taken compulsorily for this. And what we as auditors at the beginning of the audit and the end of the audit, we have to evaluate going concern assumption. That is to be part of the management representation as well. Subsequent event, this is again in the ups and downs that's going on, sometime lockdown, sometime non-lockdowns. Again, there is something that's happening, and then the market is going up and down. For example, auto industry did not do well, some other industry did well, so and things like that. So in these ups and downs, we need to consider subsequent event very carefully and include all the subsequent events that are affecting the financial statements in the management representation. We have to take it as part of the management representation. The risks and uncertainties. So now when we talk about this entire pandemic scenario, generally as auditors, we divide the clientele into two pieces: one affected by COVID, not affected by COVID. So we have made this large bifurcation as such, as we all have mentally made that, maybe not in writing, but then we mentally made it. So COVID-19, what are the risk and uncertainty? Okay, this entity is not affected. Okay, fine. Certain considerations in this entity is affected. Then certain additional checking in this entity. So all that risks and uncertainties and their projections and their planning is something that has to form part of the management representation, because there may be certain audit decisions that we have taken on the basis of some futuristic or on the basis of certain reliability on certain information that we have done. So if in case if there is a trigger for impairment provision, if there is a trigger for going concern, all these things are much more tricky. Management estimations, uncertainties, all these things becomes more and more risky, and we have to be very careful in all these things. The next important thing, as always, the fraud considerations are on a high because of everything going electronic. We have lots and lots of cyber scams, lots and lots of frauds that are happening. So we have to be very careful. There are attacks that are happening. So there are many things that are happening in this thing, and then we have to be very careful in this mode, and we have to inquire, and we also have to take this into consideration and take it into management representation. Significant estimates, among others, as we have spoken, I think the projections, the significant estimates the management has taken to make some provision, to not make some provision, to give some bonus, to not give some bonus, to do some considerations, to not do certain considerations and things like that. We have to be very careful, and then whatever we have placed reliance on, we have to get it into the management representation by and large, because we are not exempt from that. So our SA 580 had all these considerations, and then additionally there are these considerations that are coming up from the ICI publication. So that's elaborate. Now going further, from the next year, the other regulatory matters in Schedule 3 and the CARO reporting that gets triggered from other regulatory matter like Benami transactions and additional requirement in case of CWIP, intangibles and all that stuff will again add to the management representation. So our management representation letters are also ever evolving. Now we talked about requirement list and other things during documentation. Now in terms of new Schedule 3, new CARO, please relook at your requirement list, because your requirement list, if it was 45 items, now it will go to 65 items. So you will have to include the additional requirements that you have to give and be prepared, because all those things that you will be doing for the first time, you will have to document in detail, because once you set the precedence, it will keep rolling from there. So whether it be bucketing of receivables in detail and horizontal slicing of disputed, non-disputed, whether it is CWIP suspended project disclosure, or it is Benami transaction disclosure, whatever. This is the first year. Is the same way that first time when Schedule 3 come, that operating cycle, non-operating cycle 12 months, more than 12 months. So certain trends were set. So first year it's very critical to spend more time and do the documentation proper, because many of the things that will be done in the first year gets carried forward going ahead, whether you are the auditor or whether someone else is the auditor. So all these things will have to be taken into consideration while documenting in the current year. A few of the other things in relation to management representation letter: if management is unable to provide signed original management representation with original letter on the signature company's letterhead, it can be through electronic means. So again, he can put on his letterhead on a scanned copy or a soft letterhead, and then he can do a digital signature and he can provide us. So if we do not get the management representation, discuss with the management, reevaluate the integrity itself, because that's a question on the integrity itself. Evaluate the when you are talking about integrity, then you will have to evaluate the impact on the financial statements also, and all the verbal financial statements that and all the verbal representations that they have given. If necessary, take appropriate actions and you may qualify the audit report also. So I think largely that's the thing that we wanted to I wanted to cover. A few of the things that I have put up as reminders, or ready to go things, that what are the mandatory things that are to be there in file, because all these things that I have seen during in my experience, as these are the things that are looked at by any kind of regulator or any kind of reviewers. So what are the things that are mandatory to be documented will be something like engagement letter, law and regulation applicable to the entity, audit committee presentation that we make, the tracing set and the matching set that we perform, client acceptance, reacceptance procedures performed, critical issues that we have identified and subsequent discussions with the management that we do, the written management representation letter, various checklists that we have like CARO checklist, INDAS checklist, AS checklist, SA checklist, all those checklists that we have to document, and other laws and regulations. For example, in bank, there will be other laws that will be applicable, then insurance, there will be other set of laws. The documents that are reviewed by the senior, risk assessment documents, including fraud assessment checklist, materiality calculation, which is very important, independence declarations and documents relating to independence declaration, abstracts, copies of significant contracts and everything, then minutes of the meeting, all these things that we have to have on the file. So this is a list of mandatory things that has to be documented. Most of the documents is going to come in soft copy, so take care that no error is occurred in case of scanning. References to other essays from SA 230, like in SA 230, various essays give reference to SA 230, like 220, which is quality control of audit, 250 laws and regulation, 260 communication with ECWG, 299 joint audit, 300 planning, 320 materiality, 330 response to risk, assessed risk, then 315 risk itself, and 450 misstatements in audit, 610 which is using the work of another audit whenever you do a group audit and someone else is reporting to you, 701 which is scam, key audit matters that you will have to do. So actually 230 is everywhere. Documentation is all pervasive. All these have specific requirements for documentation of certain things. For example, CAM says that how to document a CAM. So it goes from identification of a CAM, why did you decide it, when did you discuss it, and how to conclude it. So that's documentation for it. Joint audit actually talks about the joint responsibility statement. Those are specific documentation. But 230 is all pervasive. Everywhere it is given reference to 230 because basically the fundamental underlying is there in 230, 501, 505, everywhere there is documentation. A quick reference to all the things that ICAI has issued in relation to this pandemic. There's a accounting and advisory, advice that is issued, subsequent event key consideration, physical inventory verification, auditor's report on key consideration, going concern, how to take into consideration, use of electronic signature. All these things are available and they are ready to handle. So you can ready to read. I think you can take it and handle the situation based on the guidances that are provided in each of these things. Ownership and retention of documentation is the property of the auditor. It is your discretion whether you want to give it to someone, don't want to give it to someone. If you want to share it, portions, extracts of it to another person, that is another auditor, you can always do it. What is the retention period? Documentation to be reliable, relevant, and accessible, and it has to be stored for a period of 7 years from the date of the audit report. That's the requirement of retention. So we all need to, unless and otherwise required. So if it is more than 7 years due to some matters, it has to be more than 7 years. That's the retention requirement. I think that's all from my side. Happy to take up any questions specifically.
Yes, thank you, Padmashree ma'am, for this lecture. Do we have questions from the members?
सर शो कर रहा है एक मिनट. Show रहे.
Okay.
Ma'am, can you see the questions?
Yeah.
Yeah.
In case you have views amongst team members. Sorry, Rishabh, you were saying something?
No, please continue. Please continue. Please continue.
In case if you have different views amongst team members on any accounting or auditing matters, whether same needs to be brought out in the audit documentation. Yes, actually, say for example, if there is a difference of opinion within the firm, so let's take a step back and go to SA 220 and SQC1. So SQC1 is the mother document on the quality control. So in that it is mentioned that the firm has to have a mechanism to resolve all conflicts of interest within the firm. Say for example, between the audit team and the engagement partner and the EQCR and the, say if there are different hierarchies like managing partner or whatever. So we need to have those hierarchies documented. There has to be a consultation policy. If it is not there, then the documentation with respect to how the different views were concluded is something that will be relevant to understand. So that needs to be brought out in the audit documentation along with the solution that was taken in the relevant case. Next question is, as a part of review process, sometimes several drafts of financial statements are reviewed by the engagement partner or the QRP. Okay, does all needs to be retained in audit file or only final signed financials? Okay, so this is very common that we all actually do not accept first set of financial statements. We all review, re-review, take a final set and do that. So what is the essence of it is, one school of thought is like retain everything so that it shows the trail of the review. That is not something that is required. The important things or the review points can be captured on an Excel or a Word document, and those can be review points. And then the final set of financials, the final, you can say the semi-final and the final is something that you can retain. Other than that, all the version 1 to say 12, all those can be discarded, and version 11 and the signed financial statements is something that you can retrieve. But the review points you can capture in Word or Excel, and then you can document that. What are the best practices and latest technical tools available for auditors to maintain audit documentation in soft copy from perpetuity practice? Yeah, so I will take this up based on my knowledge. Off the shelf tools are available, something like Caseware is available, complex tools are available, in-house made tools are available. People are storing goods on SharePoint, people are storing goods on OneDrive. They make this folder in folder kind of a structure. They make a for example, planning, execution, completion, they will make 3 folders. Under that, they will make number wise folders or area wise folders, and then they will put up the Excel sheets and things like that inside that. But then storage of these and accessibility. So once you are done with it, one of the things that is there in the application guidance, which is very important, is archival of documentation. Archival of documentation is 60 days within the period of the closure of the audit report. So once you sign the audit report, you have to close the audit report also. You have to close the documentation also 60 days. After 60 days, you should not touch it. All the housekeeping, cleaning up, yellow highlight, green highlight, ask this person, ask that person, everything has to be cleaned up, and it has to be there on the folder, file, whatever tool that you use within 60 days. After 60 days, you are not supposed to touch it. And then once it is archived, it should be retrievable in easy format. Also, any things that you use, cloud documentation, OneDrive, any tools off the shelf that you buy like Caseware and things like that, anything that you do, you have to ensure that the integrity of document is not lost and it is not being touched again and again. What are the safeguards to be followed by auditors while maintaining audit documentation on audit softwares available? Yeah, I think in a way I answered both, that it should not be edited again and again after 60 days. It should be actually archived, means it should be made read only or something. If you're having a dedicated audit software, it should be able to give you trail, and you should be able to ensure that the integrity is proven, because the way we do ITGC, regulators have started doing integrity check on our tools also. So that's something that we need to take care of. What kind of edits to audit documentation are permitted after signing date? The only edits that are permitted are housekeeping edits that we call. Housekeeping edits are like cleaning up the document, removing those yellow highlights, removing those remarks, making it more presentable, coloring it, putting some symbol and things like that. So those are the kinds of things that are available, that are allowed. No creation or addition of a new audit evidence is ever allowed within 60 days, even within 60 days. Is examining soft copy of supporting invoices or vouchers or testing it through virtual call will be sufficient, or we have to also test some documents physically? So that is what we discussed throughout the session. I think if physical documents are mandatory, we could not have completed 2021 audits at all, because most of it were on virtual mode. So it's not mandatory to look at documents physically, but then you need to ensure that the integrity is not lost. That is the main crux of it. That is the main thing of it, that you have to ensure that the document that is coming to you is authentic and it has not lost its original form and content. That's something that you will have to understand by doing the control check or the process check, and then you can accept the documents. It would be helpful if you can share example of specific representation requested by management on completeness and authenticity of scanned document. So I think I gave many examples in relation to this. One of the ways of doing it is take the scanned document and also on a video call verify that document as a control. And also when the document is being scanned for the first time, you please be on a video call and things like that to ensure that nothing is being lost. So, and also if you're talking about written representation from the management, it can be on the lines that due to COVID-19 pandemic, we are sharing the data on say OneDrive or on FTP or VPN, whatever. For the purposes of audit, we have ensured that the relevance, reliability, authenticity of the document is not lost and the form and content is not modified in any manner to impair its integrity. Something on those wordings, you can draft it and you can include it on the management representation data. Okay. Queries in relation to confirmation request. there were references made whereby proactive circulation by client themselves or using their software to circularize requests is encouraged. How do we as auditors confirm authenticity of these requests? No, I think there is a misunderstanding here. What I meant over here is whatever is directly sent by client is not direct confirmation. So for bank confirmation, it's 100% what we have to send. We have to get the email ID and we have to send it. If client is sending it through his software or something, then that is still not direct confirmation. We have to send our own direct confirmation. That's an additional testing. Say for example, limited review and things like that, we can still take it and then we can verify it. But for the purposes of closure of audit, we need to have direct confirmation. If they are doing it through their software, thank you very much, we can take that on record, but there is no substitute to what we have to do. If responses are received by client rather than auditor, is this acceptable? No, as per SA 505, this is not acceptable and this does not form part of direct confirmation. Today's presentation, yes, I will send it across to WRC and they can, I think they will share it. Any other questions?
I don't think any other questions are there. I'd like to give a vote of thanks to Sri Padmashree ma'am. Thank you so much. Thank you very much for your time. For enlightening us on a very urgent need of the topic, which is SA 230, which is audit documentation. Considering the all the small audits which are pending as of now and needs to be completed within this month and the next month itself. So a very warm thank you from WIRC, and hopefully all the members have gained something out of this session, and hopefully they will apply it in their with their clients as well. Thank you, Padmashree ma'am. Thank you all the members for attending this webinar today, and I'd like to close the webinar for today. Thank you and have a great day.
Thanks, Rishabh. Thank you very
Thank
much.
thank you.